If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everybody. Happy Thursday. Welcome back. Little A1 trading prep. It's 8:30. We just had news come out for the U.S. Core retail sales. Well, not as hot as inflation. Retail sales came in pretty much in line with expectations. 0.7 came in 0.7, 0.5 came in 0.5, a little bit of revision lower, 1.7 down to 1.6. Unemployment claims, slightly higher. 205 came in 211. That's it. In the background, you have President Trump and Xi meeting today. I believe they're in Beijing. We'll see if that makes any headlines. Markets are up again. We're looking at futures market up about 0.34%. Which means we're going to get a slight gap up in SPX. Here's the real-time SPX this morning. We've continued to grind a little bit higher through the evening. Yesterday was a pretty nice day. We had a slight pullback in the morning, and it just rallied all day. Ended up settling around 74.44. We're up a little bit higher than that today. I'm just going to throw this out there. We could be seeing some flows into 7,500 today. I do expect there to be some type of intermediate resistance between 7,500, 7,525. I'm looking for that to possibly be like the high of the week and see if that actually, turns down a little bit. I say that because if I look at tomorrow's expiration, which is a major options expiration, we are looking at some pretty key levels here. One that sticks out to me right now is 7,400. So if we're trading at 7,470 today and we flow up to 7,500 and change, is it possible that today we start to see the market, hit a high and roll over, and then tomorrow maybe actually have a down day for the first time in a while? Okay, I don't know. I'll trade it tomorrow. But this is on my radar for potentially a near-term top or at least a near-term pause. And so I'm going to try to grab some short-term profits, hopefully by staying out of the way, letting price do its thing today. I will most likely look to see if price wants to go higher. If it goes higher today, that should be a pretty easy trade. If we get into 75 or 75.15 or 25, I'm probably looking at selling some bear call spreads up here to see if price will roll over a little bit. Okay. But I'll take it. Today is just a 0 DTE. I'll try to win the day. Tomorrow, same thing. But I don't think anybody be shocked to see, if I zoom out, would anybody be shocked to see that this market's, trajectory of little dips and rallies, that eventually this, has its time to pause, maybe a pullback. If we take a look at, here's equal weight. Equal weight is slightly higher. This is equal weight S&P. If you go to QQQE, this thing has blown through the highs. This is equal weight Nasdaq. And we had a pretty decent rally. So the market cap weighted Nasdaq was up 28% off these lows. This is up 19.5%. Here's Q's. 7 weeks of bullishness. Okay, off the March 31st low. This is a rip of about 29%. Ridiculous, man. So year-to-date Qs up 15%. Year-to-date Nasdaq up 15%. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Yeah, 7 weeks in a row. Good. I mean, it's still May. It's still the middle of May. Is this OPEX going to be where we run up into it and then we start to fade after? Do we kind of limp in for the month? This is the month of May so far. So we've had a pretty strong April, obviously with that big turnaround from lows of March, and May is still continuing. Does this momentum have sustainability? I mean, it's possible. I mean, if it's like last year, there's your April candle. There's May, June, July, August, September, October. So, I mean, again, I keep saying this. I actually had a joke. It was kind of like Bart Simpson from the intro, it would be this image. This might be a good thing to put on your desk with a sticky note. I will not short a bull market. I will not short a bull market. Now, if I short a market, like if I short 7,500 to 7,525, it's with one defined risk trade. And it's based on an expected move. It's based on, deltas and stuff like this for option trading, where it's a probability that price shouldn't go higher than what's expected or higher than what's forecast and already built into the options prices. But for the most part, we don't have any structure telling us to short this market. Okay. Everything right now is still positive flows. Everything's still looking very, very bullish. But can it change? Sure. But there's no structure right now. There's no price action suggesting that it does. In fact, I wouldn't even think of shorting unless we get like one reasonable red candle. And maybe that happens intraday and we have like a really wild, nasty sell-off, or that happens with a, gap lower. But now that we've cleared these highs, I mean, this is Nasdaq. We cleared the previous all-time highs by, 12%. So the market can have a really healthy correction and still be quite bullish. We could pull back all the way to these recent highs, and this is just a nice little, buy the dip opportunity. I'd be certainly way more concerned if price pulls back deeper than that, right? So if we have these little, baby pullbacks, this market just keeps loving the bull flows. But if we have a pause, indecision, we start getting some boxes drawn in, and all of a sudden it breaks structure. Well, then there's a short-term way to just, maybe participate or just wait for an opportunity to buy the dip and see if this becomes another rally point. Okay. All right. We'll talk a little bit of everything. So crazy rips. One of the strongest rallies we've probably ever seen in the markets. I think you could probably put this in the top, maybe top 5 of like how strong and how fast this rally has been. These cycles, these options, it's crazy aggressive. And it's reflecting that price because we are breaking records. This is the fastest recovery ever from a 10+% correction into a 10+% rally. So, and we've rallied, like I said, 29% in the Nasdaq off the lows, and I believe 17 to 18% in the S&P. Meanwhile, the Dow is not quite at all-time highs, but I also wonder if this little nudge, like we're opening up about $4 higher on the Dow. I mean, if the Dow is going to go back to hit all-time highs, this is where that market breadth becomes an interesting conversation. Because, okay, market cap is being led by the narrow leadership of semiconductors and large cap tech, so your Mag 7 stocks again. And everyone is frothy for SpaceX and Anthropic and these big IPOs coming out this summer, hopefully in the next couple of months. The Nasdaq is essentially rewriting the book and trying to get them in the Nasdaq within like 2 weeks of an IPO. That's never happened. And I'm seeing these valuations where we could literally have SpaceX come to market and have a $1 to $2 trillion market cap. It's like automatically going to be put in to the top 10 stocks on size. And I don't know if it's justified. I don't know if it's just valuation, and it seems a little ridiculous. But I feel like there's going to be a lot of capital chasing those IPOs. And I think that even that is going to keep things very exciting. I think it's going to keep a lot of liquidity like pumping into these markets. I wonder if it's going to be a rotation though. I mean, if people are going to vacate their NVIDIAs or Googles or maybe even the semiconductors to buy SpaceX, right? It's like it just you take profits and parabolic moves from one and you put it elsewhere. So I could see semiconductors having a pullback. Right? I mean, and you look at a chart like this, hopefully by this time you've seen enough of these charts that they don't always look like this and stay like this. So I think at one point in probably the next 30, 60, 90 days, it wouldn't surprise me to see this really pull back to a meaningful level. Price action wise, here's what I'm looking for. I just have this low to this high. Okay, I'm just going to use really simple fib logic. If we pull back to a let's say we pull back and we have some type of move into like the 50 to 60% window. I will probably position for a buy there with defined risk, right? So I don't want to go, I'm going to put a stop loss in. But if we had a stop loss, let's say below like the 70% or the 78% zone, and we go back up to retest the highs, that's my trade. I'm not necessarily looking for this to run higher. I think that is a good trade. I think in, an option trade, especially, I could probably turn that into a, triple digit winner. But if we have the underlying asset going up 20 something percent and it's as violent or even remotely as violent as what it was on the way up, that could be a pretty exciting trade. But what I can't do is justify, buying right now at 571. And would it bother me if it goes up to $1,000 before we pull back? Yeah, it'd bother me. But that means I'm not participating in chasing. Okay. What I do have in this is I have SOXX, SMH. I have ratio spreads, bull put spreads. I have option trades in, but they're income trades versus owning the underlying. And so I've certainly missed out on this, just gangbusters move to the upside as far as just owning shares of this. But it's an expensive instrument. SMH is, it's more expensive than trading the Dow. The Dow is at $500. So SMH is more expensive than the Dow as far as an ETF. Russell is the cheapest. It's still under $300, but we have now the SPY's up to 7 and change. The Nasdaq or the Q's up to 7 and change, but these gotten pretty expensive. So would anybody be surprised like this week, as in today, tomorrow, if the Dow is going to make a run here to all-time highs? That wouldn't surprise me, right? If we try to get to 50K on the Dow, we were there. Here's the Dow. We hit 50K and then we had a massive pullback. I think what's going to be interesting is if we hit 50K again, we hit 50K again, and this is like destination 50K to retest this high. It looks like we could have a great topping story and also have really good support down here. But I don't want to call that top. Because if we go through the top, that means that what? The Dow is higher. That this is not a market cap weighted instrument. This is price weighted, and this is only 30 stocks. So there's still like that, okay, is market breadth improving to see the Dow reach all-time highs, right? So one thing that could be really helpful to stay in the game with this bull market is if the Dow takes out the highs, if we see RSP taking out the highs, which is around 205.50, we're up about 60 cents this morning on RSP. So this is a nice way to say, hey, everything is participating now to get to all-time highs as opposed to just semiconductors and just Mag 7. So if RSP hits all-time highs, if QQQE, which is already at all-time highs, if it also continues to run hot. Nasdaq to me does look a little bit overextended. It's moved so far so fast that I'd at least want to see a pullback. Before I start getting more active in Nasdaq, I need to see a pullback. So there's ways to trade it. Obviously, I can just put in option trades. If price comes to me, great. But even right here, gosh, this is crazy. If I'm looking at like a ratio spread, I can probably find something for Paul rollers, maybe going out like 60 to 90 days. Maybe getting like a 600. I'm going to take a look at it. Actually, it's not opening bell, but I'll take a look at it this morning. Let me see what like a 600 or like a 590, kind of like either naked put. Most likely I do a ratio spread combo where I'll do like a 600 by 590, try to turn it into a safe income trade. If I did get a chance to own the shares, it'd be, back down near these lows around 560. I think it just end up being an income trade, if anything. I think right now the frothiness, it still exists. If the market's trying to get through just churn and churn and churn, and the markets chase these IPOs that are coming this year, I just think there's still a lot of money that's going to be chasing very specific names, and those very specific names that might be put immediately into the indexes or ETFs. We can just see like market cap weighted leads us to the promised land. Yesterday, I don't know if anybody saw this, but yesterday we did not have advanced decline line over 50%. We had almost 55% of stocks yesterday were red, and yet the market was up a pretty decent amount, right? Markets were up yesterday over half of 1%. We were 30 points above the all-time highs yesterday, and that was led by probably 10 stocks and semiconductors. So right now we're in this really narrow leadership again, which is what led us to being cautious, where it's like, 40% of the S&P is all with 10 stocks because it's market cap weighted. But if the Dow can hit all-time highs at price weighted, and we can see equal weight, so the RSP and QQQE, if they can also keep making all-time highs, then, breadth is improving a little bit. Here's also the breadth indicator, S5FI. Okay, breadth is not improving. And this does have a little bit of concern to me. It's like we are seeing breadth deteriorating below 50% of stocks are above the 50-day moving average, and above the 200-day, this also isn't getting convincingly better, right? We had that huge recovery from March lows. So that was like literally March 30th and 31st lows, rips up here, getting us about 61% of stocks above the 200-day moving average, but you can see that it's slightly pulling back. So we're still technically in this like narrow bull market with 53% of stocks. The Nasdaq, a little bit better, 56.43 on the 200-day moving average, 51.5% on the 50-day moving average. Nasdaq just across the board with the 100 stocks is just slightly better positioned, right? So would I like to see more market breadth on the S&P? Yeah, for a stronger bull market, I'd like to see more participation here. That's why I'm watching RSP. Okay. All right, let's take a look. Let me look at BABA today. Sweet. BABA's pulling back a little bit. I'm going to take a look. I've got a calendar spread on BABA. I've got a 135 pin price. Let's see if BABA can fade just a tiny bit. Yesterday with this big candle, I'm going to see if we will pause and pull back to like a 140 or 135. I got a chart alarm set there. We'll see if I'm in profit today. And then Cisco, I'm assuming they beat earnings. Yeah, of course. They're up like 15%. I mean, not even close. Not even close to the expected move. This earnings season, this market has been rewarding the winners way more than what's been expected. Take a look at CSCO. This is the average move on earnings. 8%. We just went 15. I mean, this is probably one of the few earnings season I've seen where rewarding long options has been almost easy. I mean, if you have anything in the AI space, anything in the storage space, anything in like the winner space, they just keep winning. Semiconductors keep winning, right? Chips keep winning. So 8% was the expected move. That's off after, 98 different earnings prints. That's the average. And we just blew this thing out by, 15%. So way more than expected. Good for Cisco. Did I trade that? Nope. I wish I would have. Obviously, a bull call spread would have been great. But here we are now from this run in March. Cisco is going to open up, and we're showing a 52% rally in Cisco. This is a stock that everyone used as a poster child for the dot-com crisis. Okay, look at this thing. This is like the equivalent of the U.S. This is a U.S. stock that looks like the Nikkei. The Nikkei that topped in 1989. Look, this thing peaked out in 2000, and we just took to 2026 to get back to these highs. So if there's any 30-year employees at Cisco, congratulations, your stock options are killing it now. But what a long time you had to wait. So it's interesting how this AI infrastructure is kind of taking some of the legacy tech with it, but it's not all. It's not all. Look at Dell. Okay, Dell doing very well. Look at IBM. I looked at this one yesterday with some traders. IBM, very different. We've had a reasonable correction here off the highs, 327 down to 214. It's like a 20 to 30% pullback. So we're down 35% in IBM. What's up with this one? I don't know. But it's just a year where you have to pick winners, and it's not easy. It's not easy picking winners. I mean, for God's sakes, man, Intel. I remember looking at old chip commercials. Look at this thing. This is a monthly chart. This isn't normal, right? Intel, I bought this freaking stock at $18 last year. And it's up 591%. Unbelievable. Am I still in the stock? No. I thought that buying it from 18 and going to $50 was a good trade. I mean, it was a good trade, but it was not, not 18 to 130. So I've certainly left the money on the table on Intel. I'm covered. I'm rolling. I'm just going to do that. I'm just going to roll my covered calls. But still, this is what I'm talking about. Some of these stocks are being rewarded so well. It just makes you feel like you're an idiot. Like, why did I not hold this thing? Why did I not trail the stop? Shoulda, coulda, woulda. But some stocks are being rewarded handsomely and some are not. And I still will. This is my prescription in trading. I'm not a great stock picker. If I'm looking for stocks all the time, it's usually not buy and hold. It's rarely buy and hold. Okay. If I'm a stock picker, it's for an income trade. And I do fine. But it's stuff like this where like, this is crazy. Like people are, I mean, if you put $10,000 in Intel, that's a pretty good return, right? If you put $100,000 in it, I mean, people are becoming very, very wealthy on some of these pickers. I mean, our government is becoming very wealthy on Intel. Our president is becoming very wealthy on everything else he's doing as his businesses keep running as he's president of the United States. So it's just an interesting time, man. Like it is shameless grift, and it is what it is. Play along, because if you don't, then you have to deal with this. It's a K-shaped economy, and there are clearly plenty of opportunities to get involved in the growing side of the upper end of the K, right? We just had higher inflation prints this week. What does that mean? Well, assets are probably going to go higher. The best way to fight inflation is to have assets. If you own companies, if you own assets, they should go higher. If you don't, well, day to day and working for a paycheck is going to just push people further behind and make things further out of reach. That's the unfortunate side right now with this affordability crisis. That's very real. It's not just U.S., but it's elsewhere. Prices are expensive, but the affordability crisis in the U.S. is becoming a joke. You know, it's like people are super frustrated. And look, it'll be reflected at the polls. I mean, midterm elections. I don't know. I don't think Trump has any chance to secure the House and the Senate both this fall. I think one is certainly going to slip into the Democrats, and it's not because everyone loves Democrats all of a sudden. It's because they're just they're just fed up with like, what is going on? You know, we have a war going on. We have everything that's super expensive. Go to the grocery store, pay at the pump. Like everything in my life is more expensive. Why is this better? Why am I voting for this? Right. Meanwhile, it's like, just buy stocks. But it's not everybody, man. There's a lot of households that don't participate. So anyway, there's my narrative on the morning. It's just a lot of stuff going on, but the posture is bullish. I think we can all look at a chart like this and see that it's been a great recovery. This is a much better problem to have than it is to say, okay, the market is making lower highs and lower lows, lower highs and lower lows. Now what do we do? How bad does it get? The market's up. And I think right now in a midterm year, let me see if I can pull the stat. Let me look for, I think I have an image of this. It was something with midterm election years. Those are sectors. Fudge. Let me try to find it. Yep, here it is. So S&P 500 midterm election years declines and recoveries. This is going back to 1950 drawdowns and 12-month forward returns. Okay. So this data shows 2022. 2026 is a midterm year. Okay. We've already had a 10% correction in the S&P, 9 something. That 10% correction, forward returns, 12 months. Are we going to be at 20, 25, 30+%? The crazy part is look at the average. Okay. The average drawdown is 16%. The average 1 year forward return is 36%. So what does this translate into? Buy the dip. That's what it translates into. If the 10% pullback already, that dispersion trade from January to March was our pullback, then we bought the dip. Now the question is, how strong can that dip continue to get back in the rearview mirror? But if we have another pullback, another 5, 10, 50% pullback, it's probably buy the dip. I mean, I don't know. I think that, everything going on in Iran and oil prices, it does complicate. I think it clouds the outlooks, but the markets are always forward thinking and always forward looking and always discounting mechanisms. And I think the market is looking past oil prices, but it's still not going away when you go see that prices are higher. I mean, family and friends in the Midwest are creeping up on $5 a gallon. I mean, it's like $4.60, $4.70 for unleaded, and $5+ for the fancy stuff. Diesel's well over $5 a gallon. So, I mean, could it get worse? Maybe. But we're depleting reserves globally. We're trying to ramp up production. It's just these things don't happen overnight. You don't just get supply gluts overnight. It's going to take time. So, but I think the market's already looking past this, which is why we're at all-time highs. Okay. I still like gold and silver. If you saw in the pulver alerts, I put in a trade this week for silver. So here's XAG spot price. Okay, I'm looking at SLV. So if you saw the trade that I did for the Pulver Alerts, it is basically it's the funny strategy name is poor man's covered call, because what I did is I bought a deep in the money call and I went out like 2 years, about a year and a half. I went out to January 2028. I bought a $40 call, so way down here in SLV. Now the payment on that was about 40 something dollars. So it's like $4,000 to take that trade. But I sold against it a June expiration that would give me about a $500 profit. So I'm investing it. My debit was about $35. So I'm investing $3,500. And if I get this trade called away, I'm going to get it called away for about $4.80. Okay. Out of a 35.20 investment. So I'm making about 13.6% on that trade. And hopefully I can do that within 45 days, even though I'm buying the call option that's out in a year and a half. Does that make sense? So I expect silver to go higher. If it pulls back, then I'll just keep adding the shorter dated covered calls, and I will lower my cost basis, and eventually I'll get it called away. My goal is to make this number bigger. If I get it called away for $480, great. That's an easy income trade. I'll do it again. If it doesn't get called away, I'll lower my cost basis, and I'll try to make this a bigger number where if it gets called away, it's going to be $500, $550, $600 per contract. So I'm in for a pretty sizable position. I probably have like 100 contracts running. So if it gets called away, I should make a pretty good chunk. And I'm going to continue to kind of grind through this. I think silver right now, to me, if we have some noise in silver, that's fine. But I'm looking to see, eventually if this is going to be, making some highs and running again, especially kind of the AI chase, that maybe silver gets some love again. And look, I'm not trying to buy it and go up. I already own the shares, so that's fine if we get the appreciation. I'm just trying to turn it into some income with a, upwards trend that hasn't really, resumed. Does that make sense? So if silver resumes the trend, I want to be a part of that, and I can get income along the way, versus I'm buying semiconductors that are already up 100% and I'm trying to chase this top. No, thank you. I don't want to chase that stuff. So I think there could be a rotation away from semiconductors, or at least a take profit semiconductors into other stuff. Okay. Could it be back into silver? Maybe. Could it be back into copper? Maybe. Could it be into, boring stuff like energy and utilities? Here's a sector performance. I took the snapshot last week. Semiconductors, hottest sector in the world. Energy and utilities not that far behind. I'd probably get boring and park some money in here. So going XLU, XLI, XLB, they seem boring, but they're also a lot less volatile than what we could have for like SOXX and SMH. But this is kind of crazy, right? Look at all these sectors. Like software and cloud, IGV. Everyone's telling you to buy into IGV, not me. I think it's a tricky trade. I think software is still very disruptive. I don't like the idea of picking stocks in when a stock looks like this in 2026. I have very little interest wanting to buy it. If a stock looks like this in 2026, well, it's had a good run, and I'm not really interested in buying it because it's already had a huge run. So I'm left to kind of find, well, what's a strong company fundamentally that is postured bullish, but has not had this like parabolic run. And if I'm stock picking, that's what I'm looking for. That's like the needle in the haystack search, is trying to find things that haven't run hundreds of percent to feel like we have to chase. Okay. All right. $6 a gallon in California. That's not a surprise. What is that chart you showed last week for nationwide oil prices? That's you're talking gas prices. It's probably AAA. AAA gas prices. Yeah, go to AAA gas prices, and this will show the nation. So state averages. Right now we have $4.50 a gallon. Where is it hot? Full out west. So Arizona, Nevada, California, Oregon, Washington State, Midwest. I've got friends and family in Michigan. Indiana surprisingly is a little bit lower, but Michigan's creeping up there. Look at that, $4.90 a gallon, man. Apparently, it's hard to distribute up to the Great Lakes. This is me. We're 460. We are 460. So, you want cheaper gas? I guess where you got to live. I'm just looking at probably getting an EV right now versus I've got a V8. It's annoying. I pay a crap ton every month in gas, and it's stupid. I'm kind of sick of it. I had a discount. It was like, you go spend a bunch of money at the grocery store. They give you like a 50-cent discount or whatever. I still filled up my tank for like $80. So annoying. Does it get better? Well, I think everyone's hoping that it does. Fortunately, in my line of work, it's like, well, I guess for the gas trade and for the for the household, it's like I'll throw another contract in. I'll trade options and I'll throw another contract in, and hopefully it's enough to offset what I needed to cover. But that's the beautiful thing about trading is like it's just a game. It's percentages and dollars, and if we can find a way to carve out some profits, then we just keep grinding. Okay. The flat ones. I'm not sure what that is. Nationwide oil prices. Are you talking gas prices? I thought that was the one. Anyway, all right. I do have to run here. Am I behind again, James? I keep going my over my time. Probably. Who's next? Is Marco up again? All right. Well, look, stay tuned for more A1 trading. You're in good hands. I'm going to run in my next session. And let's have a good close out to the week. I will say one thing. Going into tomorrow's OPEX, I wouldn't be surprised to see the market top out a little bit today. Tomorrow, maybe sell off into OPEX. Why? Because I've got a big fat level down here around 7,450, which is lower than where we're going to open today, and a big fat level down here at 7,400. Now, that does seem like a heck of a sell-off from where we are currently sitting. But I don't think it'd be surprising to see the market pause a little bit going into the OPEX or slightly after. May is still a strong month. We're still up for the month of May. We had a huge April. The market can still, limp in and probably still finish positive for the month. But I just think that in the near term, we've had this market cranking higher. So I'm just really curious, like how it all, plays out today, tomorrow for OPEX. So, all right, I'll let you go. Take the next guest and enjoy the rest of the segments with A1 Trading. See you soon.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
All right, people, hope everyone is doing well. Glad to be back. So as always, we'll go through a bunch of markets today, different time frames as well, focusing mainly on the technicals and what opportunities is the market allowing us to take. I do have a couple of positions open on a couple different markets, so we take a look at that, what I am trading, what I'm looking for, and some markets which I'm interested in maybe as the week progresses or maybe potentially next week as well. And of course, if you do have any recommendations, more than happy to take a look, drop it in the chat. We can definitely go through some, but I'll start with the dollar itself, and then I'll go through some of the positions I'm in. So in terms of the DXY, as I've been mentioning for quite a while now, the focus, at least from a technical point of view, is the larger range price is trading in. Now, again, in terms of opportunities, especially from a swing point of view, I'm mainly looking what price can do at these areas. I want to see if price can bounce either at the high or bounce at the low, of course, potentially break out as well. Either direction, I'm not so much trying to forecast what dollar's going to do or predict anything. At the moment, price is trading in the middle of the range, the fair value. This is notoriously where price is going to be the most uncertain or lack consistency. So I'm not really trying to predict anything, especially right now. But if price can push to either extreme, I do think there could be some opportunity. So that's really what I'm waiting for before I look for any kind of meaningful swing opportunities on any of the USD pairs. Apart from dollar yen, which is a market I'm trading. And the reason why dollar yen's a little bit different is because, of course, yen has been weak for quite some time. So we have a lot of consistency with the dollar yen's price action because, of course, yen has been weak and pretty much every currency against the yen has been trending bullish. So with dollar yen is a little bit of an exception, but other USD pairs, which you can take a look shortly, very, very choppy. If anything, very short-term mean reversion type trades do look okay, but that's about it. At least in my opinion anyway. In terms of dollar yen, so I do like dollar yen, of course, pretty consistent uptrend since 2025 April, so just over a year now, but of course the bigger picture, we've been trending longer. But yeah, we had some crazy moves past couple of weeks with the yen, a lot of strength, sudden aggressive momentum, and structurally nothing's quite changed. Everything is still very, very bullish, especially on the daily, weekly chart, which is really what I focus on for my bias. That's all the same. We're still maintaining the higher highs and higher lows. So in terms of what I'm looking to do, it's still the same, looking to buy. And we were speaking a lot about dollar yen last week. I believe we were trading maybe around here last time I was on the stream. I think we were trading around here. So yeah, last week, Thursday. But since then, we've seen some bullish momentum and prices reclaim this level of support, which is pretty significant, which is what I was mentioning last week. I said if price can get back above that support, that becomes very interesting. I will be looking for some bullish signals. And most importantly, if we stay above, I'm looking for price to return back to these highs and potentially some swing highs on the weekly chart, back around 162. So I'm actually pretty bullish on dollar yen, and I'm basically just looking for that yen weakness just to sustain. And since we've recovered significant support, as long as we stay above that, I remain bullish. Of course, if price was to break back below that support level, I have my stop loss underneath. If it hits the stop loss, I will look to pause with that bias, because at that point, yeah, I wouldn't be too sure about the bullish momentum, at least how strong it is. We could have a much deeper pullback if that's the case, which I don't want to be in the trade if we do go through that. So yeah, dollar yen, I'm very bullish if we do maintain support. Basically, dollar yen has just been ranging over the past few weeks, and I'm looking to see if price can basically see another swing to the opposing end of that range. So dollar yen is a bit of an exception because of what the yen is doing. But other than that, USD pairs have been quite choppy, and I've been kind of staying away from them. Euro USD, I've been looking at some short-term opportunities on the 50-minute chart. But anything swing, I've been staying away. And the other position I do have is US 30, which I've been holding for the past couple of weeks now, or was it 3 weeks? Yeah, a couple of weeks. Bullish on US 30. Again, the main theory behind this one is this is one of the major US indices, which is lagging behind Nasdaq, behind the S&P. And I'm simply looking for this to catch up. And looks like this morning or this afternoon, price has kind of seen a bit of momentum. Not back at the all-time highs yet, which is still kind of my target for the trade, at least until I remove risk and start trading and then see what happens. But if we take a quick look at the S&P and the Nasdaq, they've been soaring. They've smashed through the all-time highs and they've just kept going. Whereas US 30 hasn't even actually reached all-time highs yet. So the way I look at this is the market which is severely lagging behind other major indices. I expect it to not necessarily catch up, but start showing some similar price action. Get back to highs, maybe even take them out as well. I'm not necessarily expecting price to explode. I would expect the S&P and the Nasdaq to be having some retracements pretty soon, and that will probably show up in US 30 as well. But again, I'm not trying to predict every single tick or every single move, but I would expect us to reach the all-time highs again. So once we achieve that, if we achieve that, that's really when I want to remove risk and then just trail and see how far we can go from there onwards. So those are the swing position which I'm looking at, simply taking advantage of the trend and the momentum on both of those charts. But elsewhere, it has been quite choppy. So I've been staying away, especially from a swing perspective. Like I said, I have been looking at Euro USD, but very much intraday 50-minute opportunities, because if you look at Euro USD, you can see how flat it is. In fact, you see that represented much better on the daily chart, which is really flat as well, which is basically what the DXY is doing. It's an identical range essentially, which makes sense, of course. So yeah, with markets like this, you want to be super careful, especially if you're looking for kind of momentum opportunities, trend following opportunities, because they're not really compatible with this type of price action. And that's a very easy mistake to make, because you're looking for opportunities, but really you want the context first and then the opportunity second. You don't necessarily want to look for pullbacks when the market is choppy, because the theory behind it, the opportunity is of course going to be of lower quality than when the market is trending well, like what we're seeing with some of the indices, some of the yen pairs as well. So yeah, with Euro USD, I see some short-term opportunities. I'm actually looking for some buys actually if price can reach support here. I say I was looking for some sells up here as well coming into the week. Of course, we haven't had that move, but it looks like we might be seeing a push back to support. So I'm looking for some longs around here, at least a reaction. I'll see how far I can take the position, but this is like a likely area for a bounce. I've been looking at some of the other USD pairs. I'm seeing pretty similar price action as well. Pound USD, very flat too. I'm looking at a similar move back into support and potentially a bit of a buy there as well. I'm not looking to take them both, but I do think we can see some similar opportunities. And of course, how we get there and what price does when we get there would justify the trade or not. If we see some momentum and price smashes through, I'll be very careful about placing any trades. So yeah, with USD pairs, I'm being super careful. To be honest, a lot of the FX markets are very choppy as well. Closed a long position on Nasdaq. Yeah, I mean, Nasdaq has been soaring soaring as well. Same with the S&P as well. So been some very kind of tidy price action, I must say, because the pullbacks have been very shallow as well. I mean, I was not really expecting such a massive breakout, to be honest. But yeah, I mean, it looks like we might be going through another pullback with Nasdaq, to be honest. I mean, it depends on your time horizon and the time frames you're working on. I mean, everything's still looking very bullish on the higher time frames. Of course, you would expect a larger retracement at some point. The thing is, you don't want to be too caught up in that, because we could still see price, soar a little bit longer. Let's be honest, when price had the initial breakout, I think a lot of people probably would be expecting a bigger pullback at some point, but you can see price is still pushed on, and it could still push on a little bit further before another major retracement. So yeah, at the moment in time, if I'm looking to trade Nasdaq, if I'm looking to trade the S&P, I'd probably drop to like a 15-minute chart, or maybe an hourly, and just simply look to buy the dips until price says otherwise. I think hourly would be a bit tidier. Yeah, so I'll just be looking to buy the dip. So it looks like we've already had price, of course, create new highs again this week. So I would say if we can pull back into structure around here, let's see how we react. I think that could be another smart opportunity, another smart place for a trade, and simply take it back to highs as well. Same thing for the S&P as well. And funnily enough, I'm trading the one that's kind of lagging behind, but again, there's method to the madness there, because I would expect it to eventually catch up, even if it doesn't soar like the others did. But yeah, that's kind of the take for the indices. Just keep looking to buy the dips until proven otherwise. I would expect some kind of big corrections soon-ish, but there's been many times when a lot of people are forecasting a retracement. If you look at what happened with gold past kind of couple of years or so, gold's been soaring to the upside, especially last year. A lot of people are afraid to buy because you're expecting a bigger pullback. Eventually the pullback does happen, as we see with gold, but you might still miss out on a big chunk of the pie, especially when things get exponential. So yeah, in terms of gold as well, this one's been quite flat. I've been careful trading gold. The more corrective we get, the more careful I will be. I'm still very bullish longer term, and I'm trying to see if I can plot an opportunity for a nice swing position, but I'm just not seeing any opportunities at the moment. Coming into the week, I was keeping a close eye to see what price could do with this level, because we just went and broke through that last week. So that was really my area of interest. And we did see price kind of bounce there quite well, but it didn't really provide much upside. We came back to retest resistance and failed there as well. So I'm basically chalking off this area for gold, just labeling that as consolidation or a range, and then waiting to see which way price commits, because I can see price making a move higher, I can see price making a move lower, and I've got kind of clear highs and lows which I'll target. So depending which way gold makes its move, which way gold makes its mind up, I do think there's opportunities in both directions. Looking for opportunities like this, a break and retest back towards key swing points. But inside that range, I would stay away. That looks very, very messy, very choppy. I would be very, very, very careful about looking for anything, even on the lower time frames, in that kind of conditions. Very, very choppy price action. You're not going to get much consistency there, unless maybe you're fading the lows and highs and looking for maybe quick short-term trades, maybe. But otherwise, I think it's really, really choppy price action there. So yeah, in terms of gold, I'm being very patient with this one as well. I don't think I see much opportunity right now with gold. The metals look a little bit choppy. I mean, silver had some nice momentum, but I would expect a bigger pullback for silver. I've marked out a couple of areas where I'm looking to see if price can retrace towards, especially because we've just gone and taken out this high. I don't really feel too comfortable buying into this bullish move, especially after a significant high has been taken. I want price to kind of give me that retracement, and these are the locations which look appealing at the moment. And yeah, I have to be careful with silver too, because like gold, we formed this high, we formed another lower high. We're in a vicinity where we could actually see that third high form, another bounce lower back into lows. Silver doesn't have to start ripping to the upside now. It might want to consolidate a little bit longer. It might want to see a slightly bigger correction. All of those could could come into fruition. So I don't want to be jumping into any aggressive buys, especially when we're pushing in towards resistance like we are now. So I do like silver to the upside on the kind of short-term horizon, but yeah, I'll need some slightly deeper corrections. After that multi-month range, the bullish expansion out is natural for Nasdaq. True, that is true as well. That is true. I mean, you could probably say the same with the S&P as well. US 30 probably not so much. It wasn't really kind of ranging like Nasdaq. Nasdaq was pretty textbook range in terms of pretty much equal highs, equal lows. Everyone kind of spot that without even drawing any kind of technical lines or anything. But yeah, you could definitely chalk that up to kind of a natural expansion, because that consolidation spent many months, and then we actually had a fake out to the downside. You could describe this as price having that breakout, but essentially failing and maybe trapping some late sellers. Excuse me, trapping some late sellers there before, of course, we see the continuation. So if you're looking at a textbook of a fake out and then a breakout in the opposite direction, you probably would see something like this in a textbook. So it's very, very kind of, visually kind of easy to spot. Not all kind of fake outs and consolidations are as clean as that, but I fully understand the point there. So you would kind of, especially with breakouts like this as well, the textbook way to kind of map things out is to measure the height of the range, and then typically you would then expect the breakout to be of a similar distance. Sometimes you might see it twice, but I would normally just chalk up once. Twice is a bit too aggressive for me. And typically after you see that completion, normally from then is where you expect retracement. So you probably would say Nasdaq, even with that kind of context, is still a little bit stretched and probably overdue a bit of retracement. But if we're going to see twice, there's still some room to the upside. 3,500. We might even push that length before retracement. Who knows? But yeah, that is a good point. That is a good point. We did have that kind of consolidation, so it's kind of built up, and now prices have that expansion now. But I do think with this, especially with especially with the S&P as well, that we're probably going to have some pretty hard downside too. Because, of course, you can see the consolidation, not as tidy as the Nasdaq, but you've got your range there. There's your fake to the downside, and of course price is now expanding, and this one is a little bit more symmetrical in terms of the distance, or at least it looks as if it is. So yeah, you can probably say that the S&P is hitting a similar distance, and again, maybe a retracement is due for both of them, maybe for all the major indices which are flying. So yeah, I understand that point. I mean, especially with the indices, you don't really know, which is always why my default setting is looking for the longs. I'm very, very cautious. I'm looking to short anything. But yeah, in terms of what my focus is, like I said, very focused on dollar yen and US 30 at the moment. Nothing really else is taking my fancy. I've been looking at the yen pairs, other yen pairs like pound yen, euro yen. They look okay, but to be honest, I just want to kind of sit in dollar yen and let that get to a point where I can take risk off the table before I look for other yen pairs, because especially with the intervention so recent, we might see another one as well. So I don't want to be too exposed to the yen. So I'm just going to sit with dollar yen and see what happens with that position. Other Forex pairs have been quite choppy. I mean, we've seen some nice moves on the Aussie, but I think that's coming to a point where it's getting a bit exhausted at the moment, so I'm being very, very careful. Good question. How do you know when the market is topping, when the candle turns red? Is your question when the market is going to be like exhausted and potentially turn around? Of course, we've looked at the Nasdaq and the S&P, and of course they're being quite stretched, so the question is when they're going to turn around. Well, truth is, no one really knows the answer to that. You can look for cues, you can look for signs. I think that the biggest point is you don't want to take anything as the gospel, as the truth, because I could tell you, let's go to the Nasdaq for example. I could tell you wait for a bearish engulfing candle, which would be a legit sign that okay, bears are stepping in, buys are weakening, and we could be seeing that potentially as a top. But it's not concrete. Price could always push a little bit higher. It's a sign, but not gospel. So the answer to the question is there is no answer. You're just looking for signs that could indicate it. Failure to make higher highs, a double top, bearish engulfing, price starts to break through a prior low, or each high price makes is less assertive than the one prior. So there's multiple signs you could look at to say, okay, we're exhausted, we're about to form a top, but none of those signs, technical signs I've mentioned, will give you the 100% accuracy. So it's kind of just an estimation. And truthfully, I don't really bother with looking for the top either. In the FX world, sometimes it depends on the trend. If it's like a really aggressive one like dollar yen, I wouldn't bother. If it's more like a short-term trend, especially with inside of a range, then yeah, when price reaches an extreme of a range, like if you go to pound USD, for example, on the daily chart, this is a lovely range on pound on the daily chart. If for example, this bullish move, pushes into the high of the range and we start failing, well, based on the location, I would absolutely bet on some shorts if I can see the rejection looks good, because of where we're of the location of where we're trading and the context of things as well. So that's a different situation. But if we're looking at the Nasdaq and we're trying to predict the top, you can assess different criteria, you can assess different tools, but at the end of the day, is it really the best game to be playing, trying to call tops on markets which notoriously trend higher? Probably not. At least if you can do that aggressively. So I'd be very, very careful with that. But on a market like pound USD, which is ranging, then yeah, absolutely, shorting the highs of the range, buying the lows is a logical bet. And especially if you can position yourself well, there's a good risk to reward in that as well. So the context is everything. But FX world, yes. Conditions, ranges, I think that's your best bet really. Indices, I wouldn't I wouldn't waste my efforts there. No problem. Hopefully that made sense. Yes, dollar CAD. I'm not sure a bull market. Yeah, Yoshi, completely agree, my man. I just think it's a losing game. Just in terms of stats as well. It's not like you would never call the top. You will call the top sometimes, but is it worth the other times you get it wrong? Probably not. And again, you can test those ideas, you can back test those ideas, but probably not. You're gonna have a much better time calling bottoms of pullbacks on the indice. That there is a much better statistical opportunity rather than calling the tops. And of course, you can just use the same tools I mentioned, just in reverse. In terms of dollar CAD, we can quickly run through that. So yeah, dollar CAD is interesting. Of course, we're seeing a bit of USD strength at the moment. That looks to be reflecting on dollar CAD's price action today. But dollar CAD is another one which is very, very flat. I'm not in love with the price action, to be honest. Again, looking at the bigger picture, you can see price is just very, very flat. We have equal highs, equal lows. Price has just been all over the shop. Recently, we have come back relatively close to the extreme. You could probably just say we have. Market's not always going to be perfect to the pip, but essentially we come to the low of the range and prices bounced. I want to draw the median, not median, the middle, the fair value of the range, because that's normally where price is drawn towards. This is the price where a lot of buyers and sellers would agree, at least, because it represents the equilibrium of the range. Sellers are struggling to break through the low, buyers are struggling to break through the high, but the middle is kind of like, even ground for both participants. So this is probably where price is being tracted towards. Now, will that mean price is now going to push back to the high or turn around? I have no idea, and I wouldn't try and bet on either direction. But I do like the idea of some short-term buys, especially with us breaking through some 4-hour resistance here. I would say if we can see a more concrete breakout, this is a nice sign, but I'd like price to push a little bit further. I would say just following this bullish structure here, there's a good likelihood we'll probably push to that medium point. But that's about it. I wouldn't look for more of a trade than that, because in the middle of the range, things are going to be very ambiguous. We could see selling kick in at any point. We're not really trading at optimal prices right now. So because of that, you want to be a bit more short term and a bit more conservative with the opportunity as well. So I do like some short-term buys there for dollar CAD, especially if DXY keeps rising as well. But yeah, I'll wait for a more assertive break of that resistance. One candle, especially to that degree, is probably not enough for me to suggest a buy. But if we were to see another strong close, then yeah, I would, especially if it clears it with some distance, I would say that looks like a nice opportunity. But yeah, like I said, USD pairs, I'm staying away. I'm not in love with the price action. Dollar yen's a bit different because we have that kind of yen weakness, which is proven to be very sustainable, and I'm still looking to see if I can take advantage of that. So dollar yen's a little bit different, but dollar CAD, pound USD, Euro USD, Aussie dollar, I'll just be looking for kind of short-term intraday opportunities. Really, holding doesn't really seem to be the conditions don't seem to be great for that. So I would be very careful with kind of any of the USD pairs, dollar CAD included. But anyway, guys, we have run out of time for my segment. It's time for the next guest, but I do appreciate you guys listening. And if you have enjoyed it, feel free to check out my channel where I do more similar content. But thank you for the team and Nick for having me on. Have a great day, guys, and I'll see you all next week. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone's having a fantastic Thursday here. Hope everyone's doing well. Like always, guys, go ahead and drop those chart markups into the comment section here, the chat, and I will do my very best here to go ahead and address those. Of course, not financial advice, but I will do my very best to give me my honest thoughts and opinions. So, hope everyone's having a great morning here. We did have jobless claims miss in against the favor of the U.S. here. So let's go ahead and see how the dollar is performing on that. A little bit higher though. So we are getting above this 200-day moving average. So one thing with the dollar index, it's been in this range, right? It's been chopping around for some time here, having some, no really clear decision, you would say, with dollar index. Now we have found some support here at the $98 handle. So perhaps we do have that opportunity where the dollar index does go ahead and trade higher back into this upper zone at the 99.5. I like that idea. You do have the idea that the Fed is going to go ahead and hold rates or even hike rates. I can show you guys this here real quickly here. So we go to CME Fed Watch and we go to the probabilities. You can see here that things have started to shift here. So right now in this column in blue is where we are at. And the rate cut probabilities are all single digits all the way into 9/15/2027. However, if you look at the right side of this blue column here, you can see that you have a 29% chance of a rate hike in December of 2026. And beyond that, you're back into the 30s, getting close to that 40% right there, in April of 2027. So probabilities have shifted for a more of a restrictive Fed. And so that's giving that dollar index a little bit of a boost there. We'll go ahead and see. I know this thing is very volatile. So you do have the next Fed meeting, FOMC in June, which is actually going to be Warsh's first one. So we'll see how that happens. So I think traders and markets are betting that when you look at the equity market, they're betting that the war in Iran is going to end soon. And that's why they're continuing to trade higher, right? It's a little bit interesting because usually when you have higher rates or rate hikes and you have elevated oil prices and elevated yields, things like that, equities are not really performing well, right? But you do have strong earnings in this environment, and it seems like markets are looking past the war and they're saying that there's going to be some kind of a resolution before the next Fed meeting. But if you were to get no sign of a resolution by the next Fed meeting, then that's going to be tricky, right? That's definitely going to be some headwinds for this market, and we can see some big corrections. So as far as trading equities go, I'm going to stay away from it. I don't advise, of it. Again, not financial advice, but that's just my personal opinion that trading at these highs here is very, very tricky. There's no pullback. And markets can be hypersensitive. So we'll go ahead and see what happens there. As far as pullback goes, I do like this recent like all-time high area, like right when we breached it here. This was resistance at one point where the market was chopping around. So if we were to somehow find a way back over here, that would be really great. From a percentage standpoint, that is a 10%, 11% correction to the downside, which can feel very scary at first, but I think that can be very healthy. The next target would be somewhere around here, that 20-day moving average acting as dynamic support. That's around 5-6% there. So that's just my thought process on equity markets. But it sucks because, seeing this thing go up, and if you're not participating in it, it can be somewhat tricky or frustrating. Definitely understand that, but patience will play out here, and whoever's trading up here will get washed out eventually. Market has a very good way of doing that to people when people are very euphoric and they're chasing these highs, especially when you have leverage involved. Market has a really good way at teaching these people a lesson. So don't be that person. Just wait, be patient, and that's my thoughts there on the Nasdaq here. Same thing with equities as well. Same kind of price action, just trading higher in a straight line, no pullbacks. So waiting for something meaningful would be the way I would approach that. And then dollar index, of course, we are breaching those 200-day moving averages to the upside there. So I think, dollar longs could be a good play. Now, obviously, I'm not in a dollar long position, so I'm sitting out right now. So what I would look for myself, some actionable steps that maybe you guys can take on as well, would be waiting for a pullback in the dollar index. So I'm on the 4-hour chart now. What that would look like here, I'm just going to move these zones here to the right just a little bit here. A pullback back into this level, this $98 handle, right? I would love a pullback into here so I can catch the bottom end of the support or this channel and then target the next level, which is 99.5. That's kind of what I'm looking at. If I don't get that, then I'll probably be looking at some fibs. So if I put this fib here from low to high, 38.2 is right here shy of that 20-day moving average. So if I get a pullback into the 20-day, I'll probably take that long. Now, what that would look like what asset am I looking to trade to go long the dollar? Euro dollar is on the first thing that comes to my mind, but let's go ahead and look at the edge finder to see what that would look like. So let's go to majors only. I just want to see the majors. Okay, so we're getting some conflicting reads, honestly. So you're seeing dollar Swiss getting very bearish, dollar yen bearish. Okay, I like dollar CAD. I think dollar CAD would be the way to go. I don't have a reading on Edgefinder, so that's tricky there. But all the other ones are getting a contrarian signal. So dollar Swiss is bearish, which I don't want to do that. Dollar yen is bearish. And then it's still showing some Aussie and Euro dollar strength there. So in my personal opinion, the way I would play that would be dollar CAD. The CAD basket has been weakening as a whole, so I do like that dynamic as well. So as far as what that would look like for dollar CAD, well, we can go ahead and look at it, right? So let's see. Pullback into this 20-day will look good. We are testing this level of resistance here, so maybe we do get that opportunity where the dollar CAD can take a little bit of a hit there, some kind of a pullback, and then we can hop in there. Let me put a fib here from low to high to see what that looks like. So yeah, perfectly lined up. 38.2% retracement level lines up right there on that 20-day moving average. So that's what I'll be waiting for there. I'll put an alert right here real quickly. There. Now, what happens if we don't get the pullback? What happens if dollar index continues going higher, which is very possible? And that happens to me all the time where I don't get the pullback, right? Well, in that case, I would just go ahead and wait for a break and retest. This red one right here, this is the 50-day. So if you were to get a break and retest of that 50-day, I'll take a stab at dollar CAD, and then I would just put my stop loss right below. So what that would look like would be something like this, and then my stop loss right here below the 20, and then I will target this next zone, which is all the way up here at 1.395, right? About 227 pips take profit, and then my stop loss will be 86 pips, give or take there. So that's what that would look like on a break and retest situation. But ideally, the trade looks like this, right? This is ideally what it looks like. So something like this. Yep, prepared for both scenarios, but I like dollar CAD to the long side. As far as current positions go, right? What am I managing at the moment? Well, I have the Aussie basket here to the long side here. So this one's in profit here. We are seeing the Aussie dollar getting a little bit of a weakness there today. In fact, let me just go ahead and look at currency strength as a whole to see what that looks like here. So we do have, wow, look at that. Aussie is the biggest loser of today by a big margin. I wonder what happened. I didn't see anything quite meaningful for Aussie. Let's see here, Australian US dollar. Maybe some news here that I missed. So let's go here. Aussie, this is yesterday, hit the highs. Okay, I don't know what's going on there with Aussie. But we'll see. If you guys can put that in the chat. Maybe I missed a data point. Feel free to let me know. But back to what I was saying here. What am I managing? Open positions. I have the Aussie basket long positions doing profit there, so I'm doing quite well. So it's just a matter of managing them. These are largely in profit here, so I'm not worried at all with the dollar or AUD weakness today. I am targeting parity on Aussie CAD. For Aussie Swiss here, same thing. I'm just trailing right here as well, and then Aussie Kiwi there. I'm trailing like if we were to get above this level of resistance here, I would just trail below and then keep it pushing higher. So that's kind of my positioning there. But again, don't have anything new besides the idea that I want to go long the dollar, but I just got to wait for some pullbacks. So let me go ahead and see what's going on here in the chat. Hey, Simo. Hey, SK, how you doing, man? Good to see you too. Let's see the top status page on Edgefinder. Yeah, sure. No worries. By the way, guys, for those that don't have it, definitely consider getting yourself a copy of the Edgefinder. It is the tool that I use to pick my trade setups and filter my trade setups and avoid some losses there. So it's definitely very helpful. There's no discount right now at the moment, but if you use my code ASPIRE, you can get 25% off. So a little bit of a discount there for you guys, but definitely consider joining this tool. It is so helpful in my trading. But right now, it seems like the biggest thing right now is the Aussie basket long. So that's why I'm going to continue staying in those trades. Although you are seeing some weakness there in the Aussie dollar today, the fundamental picture and the outlook still looks in favor of that. So I'm going to stay with that. I'm going to stay with the Edgefinder there and continue that long idea. As far as other things go, the CAD basket, you can see that down here getting a bearish reading. So that's why I do like that dollar CAD idea. If we start to see the Edgefinder point more in the direction in favor of the US dollar, I would love to play the dollar CAD. That's a good one there. Pound is getting a little bit of a bearish reading as well. But the recent macro has been quite well. So the data points for the pound have been surprising expectations or beating expectations consistently here. So you can see that at 100%. So that's why I'm not looking to short the pound at the moment, but could be an interesting idea. I forget what we talked about on the end of the end of yesterday's stream. It was something pound related or something else. You guys remind me on that one. That was also a good trade setup worth looking at. What about Aussie Kiwi and pound Aussie? So yeah, so Aussie Kiwi, like I said earlier, I'm looking to trail if we break above this level of resistance and then just continue the structure higher. This thing is on a monster uptrend there, so I'm just looking to ride that wave. For pound Aussie, I'm not in that trade. However, the chart has seemed to be just running away from you, so I don't have any interest in shorting. This is a strong trend. Don't get me wrong. If I was filled in somewhere over here at 1.94 or even somewhere here or wherever, I'd just be writing the trade. But because I'm not in the trade, I don't want to short fresh lows because this thing can pull back at any time, right? We don't know. So the risk to reward is not there. The trend is there. The fundamentals are there. But, for me, getting into this market fresh, the risk to reward is not there. So I don't want to participate in that. So, fantastic to whoever is in the trade, but that's not me. Hey, Max, how you doing, man? Silver is shining more than gold. Can you share some of your thoughts? Let's see silver's down 3% today, 3.5%, and gold's down not even 0.5%. But I can see what you're talking about here, the relative price action. So I'm not going to discount that. So if you just look at the daily chart on silver and look at the daily chart on gold, silver is a little bit doing better. Here's what I'll say, man. On silver, I'm not going to touch silver at all this whole year. Silver had some very interesting price action, right? Let's go 12-month chart here. This was 2010, 2011, or this was the 80s, sorry. Monster run up here, silver just faded it off entirely, and the forward-looking returns were lackluster. Same thing in 2010, 2011, same thing, right? So looking at the monthly chart, you had a monster run up here. You went all the way higher here, and then you finished the year red with a big wick on top. I think that's a possibility with silver this year as well. So we had this monster run up here. You're having a big wick here for me. You still have 7 months and 18 days left. If you were to print this candle red, then the forward-looking returns you can see here from history looks very lackluster. So silver is not on my radar. I would prefer gold if I'm looking to trade that asset, if I'm looking to trade the metals. But yeah, that's just my thoughts and opinions on silver, man. So and I'm also not the biggest, like, I don't have experience trading silver, right? I just look at it from a holistic view as a spectator. So that's also, take what I said with a grain of salt with that silver, but I don't like silver at all trading it. How about New Zealand US dollar shorts? Yeah, so Kiwi was the biggest loser yesterday as far as relative performance. One thing with Kiwi, right? So the reason why that happened yesterday, and I posted that on the Telegram channel. So again, the Telegram channel is completely free for you to join. Definitely go ahead and hop in there. Let me go ahead and pull that up for you guys here. What I talked about yesterday, but essentially with the Kiwi dollar, you did have some weakness there, right? So similar to what the Australian dollar is doing today, when you look at the currency strength chart, the Kiwi dollar was way at the bottom here, right? So that was happening yesterday. A lot of it was due because there was some expectations that there was going to be a rate hike in May. Those got walked back, right? So now the next one is going to be in June or July. So that one's still on the table, but the rate hike expectations for the near term rate decision for RBNZ was rolled back. So that's why you're seeing some softness there in the Kiwi dollar. Now they do have that inflation pressure still that they're having to fight. But then you have to look at the perspective or where everyone else is at, right? Because when you're trading currencies, you're trading two at a time against each other. So let's do that. Let's look at let me do this for you guys. We're going to go to economic data, interest rate data, interest rate projections. And we're going to pull up the dollar against the Kiwi dollar. And we're just going to see what that looks like there because they both want to hike, but one is probably going to hike more than the other. So look at this. At the moment here, Q2 2026, Q3 2026. Marco, how you doing? Are you there, Marco?
Hello.
Okay, cool. Let me go over this point here real quick.
Yeah, finish your point. Yep.
Dollar here is going to be higher than the Kiwi, right? So that rate differential is in favor of the US dollar. So that's why you have to navigate that situation. Then it becomes a case of which one's going to hike faster than the US. Looking at CME Fed probabilities there, you do have a strong likelihood that you are going to see some rate hikes in the US. So that's the tough thing to navigate with Kiwi dollar. I would say the price action would be your friend on this one, right? Because they're both looking to hike. So just watch the comments of each central bank and see how they are. But Kiwi dollar is looking pretty quite strong. You're still above some key moving average. So if these act as dynamic support, then Kiwi dollar to the upside. And if they fail, then Kiwi dollar to the downside. But right now, if I just zoom out here, Kiwi dollar is just in a big range, right? We're pretty much in the middle of this range here at 0.61 and in the 0.585. So we're in the middle of this one. Hey, Marco.
What's up? What's up? How are you doing?
I'm doing pretty good, man. How about yourself?
Doing pretty well as well. So my positions are looking fine. If I can just flip through the watch list. So let's remove this, add this. Whoop. Yep. Okay. So I have the Bitcoin long, trailed the stop a bit more, a bit tighter at 77.9K. I think we could get a bit of a pause in terms of risk on. I think we could get a bit of a dip in equities. Of course, they're overextended, but I think this period in May, in terms of the seasonality, Max says yen intervention as we speak.
Let's man, I just pulled up Financial Juice. Look at that. Okay. If you want to go to my screen here real quick. Seems like we are seeing some intervention live as we speak. Let me go ahead and put my screen on there. This is Financial Juice. Suspected intervention there. You are seeing the yen strengthening here against the dollar here. Very marginal. Let's go to currency strength index 2 to see that illustrated better. So you're seeing that teal color there. It's popping up there for the yen. So we'll see how that develops. But yeah, maybe there's an intervention for sure.
Yeah, we can definitely talk more about the intervention stuff. So I just wanted to go through this. So corn long, gold at break even, euro dollar just around break even, I would say. And then Nikkei and Nas don't seem to be pulling back just yet, but I think this part of May should be bearish in terms of the seasonality. I also want to say, if you guys want to participate in the DNA funded giveaway, so the process is apply for the free Discord. So you first need to get into the A1 Trading Free Discord. I'll post the link in the comment section. Then you find the channel called giveaways in the Discord. And then you have the form to enter the giveaway, to enter the wheel of names. So it's a bit of a different process, but we end up with the same sort of wheel of names, and then we pick a winner. So it will be a 5K one-phase account. And my thoughts on the intervention. So first thing, it's a bit weird that they would intervene right now because the US seems to be getting some, I would say, hawkish data. So that's a bit weird. Would you want to intervene into a strong dollar? I don't know. I think that's pretty. I think that's pretty dangerous. And then the intervention so far seems pretty small. I mean, you can say this was an intervention. This I don't know, but every single time we cannot seem to get lower. I mean, this one full recovery. This one full recovery. This one we shall see, but probably a full recovery to the upside. So. We're kind of finding a bottom that cannot seem to crack at around 155.7 or 0.8. I do think that they're going to try and defend the 160 level, but if the Fed flips hawkish, that could be very, very tough for the BOJ and the MOF. And as far as I understood, it's not even the BOJ that is doing the intervention. I mean, they're executing the intervention, but it's the MOF, which is the Ministry of Finance, that actually decides when they want to do an intervention, and then they talk to the BOJ. So it's that sort of procedure. So every time we mention intervention, we should actually talk about the MOF, which I believe is the Ministry of Finance of Japan.
Yep. And it's also weird that they're doing it here in the US session. They usually do it overnight when I'm asleep. So that's also interesting there. The reaction seems very minimal. So it looked crazy up front there in the beginning, but seems like the dollar yen's pretty much flat on the day. So we'll see how that develops.
Yeah, they just cannot seem to have enough fuel to push this thing down. The initial one was definitely big. of course, this one. It had a big impact, but I'm not sure what they're doing with these smaller subsequent ones. Are they just not doing or not selling enough US Treasuries? So do they have maybe too little powder? Do they just want to signal to the market like we're monitoring the markets and we're prepared to do a bigger one if needed, but we're going to do these smaller ones just to remind you, just to sort of stop everyone out? Maybe that could be it. You know, you got a lot of retailers probably bidding UJ and buying UJ on a smaller time frame. So maybe if they just want to stop everyone out and then let the price develop, that could be a tactic as well. I think the main point of an intervention is to curb the retail the retail trading, and not just retail trading, but speculative trading.
Yeah, the speculators. Marco, so we were talking gold yesterday. I want to kind of go into it because someone asked me about silver. My personal preference is gold over silver.
Okay.
What are your thoughts on that?
So I am in a position. I am in a gold buy, and I do have a second buy limit set. So the initial one was at 4727. Second buy limit, or the second position, is at 4581. I do like gold. I think we're forming this sort of a triangle. So I think the price action is, as they say, getting squeezed. And we should see a pop either to the upside or to the downside. So we should see some volatility out of this triangle, whether it be up or down. I mean, I would rather it be up, but some sort of momentum should happen because the price action seems to be coiling inside of the triangle. I also think most of the weak hands have been shaken out. I think there's still overall bullish pressure on gold, and I think that bullish pressure could start to catch up. And also, I took this position because the edge finder was bullish. If it stayed neutral, I would probably stay out. What about you?
I mean, me personally, I think that the end to the war is pretty near. However, I did say that a couple weeks ago, and obviously it's still going on, right? But I do think that there are some developments there, like the market's at all-time highs, despite all of this, which shouldn't usually happen in an environment where you have higher yields and something like that, higher oil, all that good stuff. A Fed that wants to hike rates, maybe they know something we don't. That's just kind of my thought process. Like they're ignoring it for a reason. And if we were to see an end to the war, like I kind of would want to from a humanitarian perspective, but also from I can kind of see that happening. Then definitely gold, regains its shine there. You do get some dollar softness, and risk on continues to thrive. So that's kind of my idea there. So I didn't notice the wedge there, the triangle there. So that's from a technical perspective. Yeah, a breakout would probably be quite aggressive to the downside or to the upside.
Yep. And isn't it funny that gold is acting as a risk on asset? I think that's pretty interesting.
Yep. That when you throw in the yields and the borrowing cost of it, that definitely is a very big variable when it comes to like a trading decision on buying gold or not.
And also, I have a question for you. So, do you place a lot of importance on what the BOJ is doing in terms of the interest rate? Because I believe they're supposed to do a hike on the next meeting. So there's like an 81% chance of a rate hike on the next BOJ meeting. Do you think it has a huge impact on UJ? And are you paying any attention to that for trading decisions? And also, the intervention has now been fully retraced. So
yeah, not necessarily, because it seems like, from my understanding, they're only looking to hike to 1%, and then they'll probably take a pause right there, and they're at 0.75. So the kind of amount that you need to price in is very minimal. So let's just put yen up here as well on my rate projections tab. Yeah, so they're pretty much there. Let me actually put my screen up. This is the interest rate projections tab. Here in blue, you have the US, and then in red, you have the yen. So they're looking to hike rates. Don't get me wrong. It's very possible that they do it on the next one, but moving forward, it seems like they'll be pretty much stalled out there. So that right there, that's what kind of like makes me not pay too much emphasis on the intervention. Like if it happens, it happens. If it doesn't, then so be it. But there's only a couple basis points that they need to price in for the next one, and then from that they're flat. So, and then you do have the idea that if the Fed actually does raise their rates, then the rate differential just stays the same, but it's more higher, right? So,
Yep.
yeah, that's kind of my thought process with dollar yen. It's still a funding currency. The only thing is that, like, in the future, maybe a couple years from now, that the spread between those two interest rates just narrows a little bit. But for right now, you still have about 300 bips of spread there in rates.
Yep. Absolutely. And also, I mean, the real rate in Japan is still negative. Even if they hike to 1%, I think it's still going to remain what they say, like, deeply negative. So it doesn't really, as far as I understood, it doesn't really change the situation with UJ. It doesn't change the fundamental situation. And then if the Fed actually hikes, it could add fuel to the fire, and that could really make it spike up, basically. So the Middle East, you said you saw some developments that are supposed to lead to a sort of a resolution.
Not that I saw any developments myself, but I just,
Okay.
like, the markets are treating it as if there is a resolution on the horizon. Like, I didn't see anything as far as the headline goes that can kind of point to a resolution or not. It's kind of just my personal speculation, and also just looking at the price action. Because usually when I don't have a pretty good understanding, or when I just don't have all the information, I kind of resort to the price action. I think the price action can paint the story pretty well. And right now, like, the market's completely ignoring it. Like, they either know that a resolution is on the horizon, or they're making the bet that there will be a resolution by the next Fed meeting. That's the two scenarios that's on my mind. So with that, that's why I think that there could be something on the horizon that's positive.
Yep. And pretty much the markets haven't priced in a kind of a more long-term conflict and long-term closure of the strait. So it's anyone's guess. It's, as I mentioned most of the time, so it's impossible to know what Trump is thinking. It's impossible to guess what Iran is thinking. We don't even know who is the leadership in Iran, because they're so scattered. Like, by the time a specific order goes from the top all the way to the bottom, to, let's say, a tugboat on the strait, the message may get lost in translation, and the receivers of the message may not want to respect the message. So I think Iran is super tough to sort of to get into a negotiation, get into a deal. But I'm just trying to stay away from that and focusing on the economic data. I think the markets are doing the same, and that is great to see. Makes our job, I would say, a lot easier.
I 100% agree, and I'm actually quite thankful that that's the case at the moment. Now, maybe you get a flash of, markets start paying attention to headlines again, but it seems like markets are just looking at the hard data now. They're looking at, the central bank in the U.S. looking to hike rates. They're acting on that. You see dollar up today, things like that. So that definitely makes our job easier. All right, Michael. Well, I'm going to go ahead and head out for my portion of the segment here. You have the challenge giveaway going on as well, right?
Yep, I do. Yep.
All right, my man. Well, I will see you tomorrow. Happy Friday, Junior.
No worries. So we'll see each other on Friday, and let's see what happens to the dollar and the yen. If the intervention actually
I'm going to be
works.
looking at that right now. I'm going to be monitoring it just to see what goes on.
Yep, absolutely. Okay, see you, Alan. Goodbye.
All right, man. Take it easy. Bye.
Okay, so let's continue with the regular segment. Let me just also see. I think Tiger sent a message, and he's supposed to come on after me. Let me check that. So we go to the schedule. So no, James is after me. Okay, fine. So one more time, if you want to participate in the DNA funded giveaway, you first need to join the A1 Discord. Link is in the comments. So join the A1 Discord, go to the giveaways channel, sign up for the DNA funded giveaway. It's going to be a 5K one phase account. And in like 5 to 10 minutes, I will announce the winner. So let's see. Comments. Bashi says he wants to kiss the supreme leader. What else do we have? Silver. Yeah, look at UJ. So pretty much completely recovered. The only thing I can guess that the MOF is doing is they just want to make the markets impossible for speculators. Because if they do a small intervention like this for the next, I don't know, 30 or 60 days, and you never know when it's going to hit, it's tough having a stop loss. It's tough buying UJ because you're not sure where to put your stop loss. It's tough selling it because there's upward pressure, so you never know when the intervention will happen. And this may discourage speculators. So maybe their goal is not to stop UJ from moving. Maybe the goal is just to make the markets extremely tough to trade for speculators. Not sure, because why would you expend assets? Why would you expend capital to do these small interventions that get completely recovered? Like the one from the 6th of May, completely recovered. The one on 12th of May, completely recovered. This one, completely recovered in a matter of seconds to minutes. So not sure what the goal is. If anyone has an idea, put it in the comment section. So to run through the watch list once again, I have Bitcoin, which coincides with risk on, and I think we could see a bit of a pause, a bit of a correction in risk on assets for the next few days, maybe. So I think the second half of May, in terms of seasonality, we can take a look because we have the Edge Finder, of course. So if you go to the Edge Finder, you go to seasonality monthly. Okay. S&P. Where can we get the annual one? Okay. So May, actually from the 24th, from the 24th to the 25th, there's a bit of a dip, but then that's fine. Isn't the saying sell in May and go away? I think that used to be a saying. Maybe not anymore. So this is a 10-year average, which means that the saying sell in May and go away could have been for the previous decade, right? But anyway, I just got it in my head that stocks and generally risk on assets, they tend to sell off a little bit in May. That's why I trailed the stop. So move the stop of Bitcoin to 77.9. Gold isn't doing much, so I would love to see some volatility kick in. If it doesn't, I'll probably close this position. It doesn't matter, or it doesn't make much sense to keep the position open if the volatility is going to be low, if there's going to be no movement. And EU seems to be going down, so that's fine. Dollar seems to be going up across the map, if I'm not mistaken. And Fed hikes are actually starting to get more and more popular. Like, this is pretty cool. So this website, Rate Probability, choose the Fed. You have the line. So you have the current line of the implied rate path. You have the 1 week ago, and you have 3 weeks ago, right? And you can see how we are going up, up, and up, right? So the line is going higher and higher and higher. And as hikes get priced in, that should, of course, bring the dollar up or bring euro dollar down. So that's the main thesis behind this trade. Let's see. USD ZAR. Aussie Swiss. Bashi says, just to clarify, I'm a straight male. Well, you wanted to kiss the supreme leader, so silver is looking bullish, short term at least. Let's see. So silver pulling back a bit. I prefer gold, but because there's a big correlation between gold and silver, I would say I'm bullish on silver as well. You cannot really be bullish on gold, but bearish on silver. The correlation is very, very high. So if I had to pick a direction, it would be a bullish one, but I do prefer gold. That's why I have a position on gold. Sell in May and go away. Yeah, that used to be a saying, but seasonality no longer points to that sort of an effect. Aussie Swiss, Aussie Swiss, Aussie Swiss. CHF, let's take a look. Aussie Swiss working out pretty well. So super bullish. What about Aussie NZD? I know I was looking for a buy setup on Aussie NZD, but it kind of slowed down here. So it kind of didn't do much. Look, if you're trading the Aussie, you're trading the risk on narrative. So you're kind of trading NAS, you're trading S&P, you're trading equities. I think there's going to be a bit of a pullback, a bit of a correction in equities. So there could be a bit of a correction coming for the Aussie as well. So Bashi says, I set his hat. Okay. Well, that clears things up a bit. GPUSD shorts. Would I do GPUSD shorts? Now, I like Eurodollar shorts. GU shorts, not so much. Yes, I'm definitely not looking to buy the pound. I think the pound is a very, very weak currency. I think their long-term economic data is bad, is bearish. You also have trouble on the political side. You have Comrade Kier running, basically running the country, and he's not doing a good job. So he needs to step down, but I'm not sure if he will step down. I'm just not liking the whole situation. Bad numbers, politically uncertain. The leaders are incompetent. So I would not be long. Being short, the data seems to be improving a little bit. Like the way I do my analysis, I go to economic data, I go to GDP. Then we find the GBP. The latest print was pretty high. That's nice. But overall, not so great. Not a great situation overall. See? Then we have the CPI. Let's see, GBP. 3.3%, so going up a little bit. But I would say the main issue here is the unemployment rate. So GBP unemployment rate. Last print was lower, but overall it's grinding higher. So overall there is an uptrend in the unemployment rate. So long-term data for me personally, it seems to be bearish. Now, yes, the heat map, the short-term data is bullish, but when I'm trading a currency, I usually want the long-term data to coincide with the short-term data. And in case of the pound, it's not happening. So let's do the giveaway now. Let me grab all of the entries. Today is the 14th of May. So let's take a look at the 14th of May. Okay. Let's copy the names. Go to the wheel. Paste, spin. And what do we have? Alex. I think it's going to be Alex. Yeah, Alex T. Congrats on being the winner. I can start to predict the wheel because I've seen it spin like 100 times now. So Alex T, congrats. I have your contact information. So after my segment ends, I will send you the code for a free 5K one-phase account. If you're looking to get funded, I want to remind you that DNA Funded has a 25% off code. The code is, let's put it up there, A1 Live. Gets you 25% off any DNA funded challenge. Okay, so A1 Live, 25% off, and I'm currently in a 25K two-phase funded. It's not a challenge, it's kind of a funded account, so I'm trying to get a payout. A latest trade is selling GP Swiss, and this challenge is purely traded by ChatGPT. So I'm down $550, 2.3%. Trying to climb out of the drawdown and get some payouts. So I've had a great experience so far. There's a big broker behind this company, and their support team is great. So they're fast to reply, they get things done, and the communication is professional, which is exactly what you need when you're paying for a prop firm challenge. Okay. Let's see. JPY sure loves to wick nowadays. I know. UJ looks weird. Looks weird. Like, why would they expense capital Why would they waste capital in doing these small interventions that don't do much? I don't get it. But hey, I'm not in the MOF. I'm just a guy on the internet, so what do I know? UK minister resigns as UK health secretary. Bad signs. Silver down 3.9%. The UK has been anemic. Is that the right word? With high inflation all year. I haven't heard it defined as stagflation yet. Why? We had surprising growth. Employment is kind of stable, kind of. Macro performance is superb. Just keep at it. Well, thank you, Sluggy. DNA best, not some kids in a base. Yeah, because with most prop firms, it's a couple of 20-year-olds running the prop firm in their basement, in their mom's basement. So it's the same thing like when you had NFTs, I think, and when you had crypto projects. I know I have a friend who used to work for a crypto project. He did the marketing stuff, and he didn't even know who the founders were. When they were on the call, the founders didn't have the camera on. He just heard their voice. And there were a couple of like 18 or 19-year-old kids doing a crypto coin project. And guess what? After 1 year, they rug pulled the whole thing. They stole a bunch of money, and that's how it goes in that industry. My friend got kind of screwed as well. So yeah. What else do we have? Stocks. Let me see. DAX, FTSE. Let's get back on the daily chart. Silver is pulling back and gold not so much, which is interesting. But then again, silver had a pretty big move up. Gold really didn't have such a big move. So if I had to list all of the assets that we're trading by what is easiest to trade right now, or where is the most edge, the most alpha, to what has the least amount of alpha, first thing would be equities. If you're a scalper, this is kind of your dream. Second, I would say crypto. So Bitcoin had the recent breakout, and it may start to wake up. It may be playing a lead lag relationship with the Nas. Then you have metals, which are starting to do something, gold and silver. Then you have Forex. In Forex, you need the Fed to commit to hikes. So we need to see the Fed actually commit to rate hikes. Otherwise, it's just a very boring market. After that, I would say oil. The last thing would be oil, because I think oil is extremely tough to trade in these market conditions. Geopolitics, predicting what Trump thinks, predicting what Iran thinks, very, very tough. Sounds like a great opportunity. I'll start a prop firm too. Well, you can. You absolutely can. You need like zero capital to start it. Marco, do you think about GJ? Have some shorts open. Okay, GJ, and then I'll pass the stream on to James, GBP, JPY. When it comes to the yen at the moment, I really would not want to participate, because I'm just not sure what the MOF is doing. I'm not sure what the BOJ is doing. Well, BOJ is raising rates, but MOF, I'm not sure what the hell is going on there. So right off the bat, I don't want to do anything with the yen. With the pound, I would prefer to sell it. Now, I'm not selling it because the short-term data is actually bullish, so it's kind of contradictory. Short-term data is bullish, long-term data bearish. But if this thing flips to bearish, if the short-term data flips to bearish, I would be happy to sell it. Yeah, especially things like pound Aussie. You want to pair the pound with the strongest pair, which this time is the Aussie currently, and I think it could be the dollar as well. So selling GA, selling GU, I think are the plays for the next few weeks, maybe even next few months. So that is about it. Thank you very much for watching. Don't go anywhere, because you have James coming on after me. I wish you a great basically day in the markets, and I will see you tomorrow. So that's it. Goodbye.
What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Hello guys, my apologies, didn't realize I was on mute. How's everyone doing? Happy Thursday. It's good to see you all. Hopefully your weeks have been successful. So there's not much going on my side of the markets. I'm still sat in SSLN or silver, which is currently having a little bit of a pullback, nothing too major. However, it's overall quite a nice profitable position. Hold on. I had another tab open, play music. Okay, so I also decided to go long on Aussie yen. So I decided to use the dip here as a little bit of a buying opportunity. I was in long right at the top before we had this bit of a sell-off here. Added in again, not big positioning by any means, very, very small. So I've got an average price at 114.3, and I'm still in the Aussie Swiss as well. The Aussie dollar seems to be having a bit of a pullback today. Nothing major, but as we've been discussing, it is a very crowded market. So, it's a very crowded currency. So these types of pullbacks, profit taking, so on and so on, is bound to happen. Now, on the back of that, Pound Aussie is setting up another trade idea or another setup here. So it looks like we could potentially come into the 61.8 level, retest these previous lows, come and retrace a little bit towards the 200 moving average, and then we could execute a short position, which I think would be really nice. We did bottom out here with a oversold RSI, so I think this sort of pullback, hold on, what's going on here? There we go. This pullback here was, pretty obvious and pretty due, to be honest. Bashi, good to see you. Sluggy, hello. Clean shaved potato. Yeah, it's not good, Bashi. I didn't mean to go full shaven. I look a bit like a peanut at the moment, but it is what it is. I had my electric shaver on the wrong setting, so it just went full off, and I was like, oh god, there's no saving it, so I had to shave it all. Anyway, Pound Swiss is looking good, so I'm not in this position yet. I am still waiting for a better opportunity to actually get in or a better price. Overall, it still seems like a fantastic trade. I've actually got a video on the UK economy coming out next week. Not a huge video, but just covering some of the problems that are going on within the UK on the political side, the financial market side as well. So I am still sat bearish on the UK, the sterling, and the overall British economy or the United Kingdom economy. We've also got Pound Swiss getting a bearish reading here of -8. So overall, it's looking fantastic. Again, as I keep reiterating, the downside of this trade is it's very expensive to hold short positions based on the carry. So if we go over to macro scanners, have a look at the carry trade scanner, and if we look at Pound Swiss, which is number 4 right here, we can see the BOE, or the Bank of England, has an interest rate at 3.75, whereas the Swiss National Bank is at 0. So the interest rate divergence is non-existent. So obviously this is a good buy position to hold because you're paid those positive swaps. It's not the case for sellers, unfortunately. It's a rather expensive position for us. So nothing we can do about that, obviously, other than try and manage the position around that. So what I mean by that and what we can do is avoid a DCA approach. And the reason you would want to avoid this is because you don't want to have drawdown. You would actually want, in this case, you'd want to get a sniper entry as much as possible, because obviously the longer you're sat in drawdown or even just a range-bound market, you are just going to be paying for that whole period of time. So it's just going to be a losing idea. So that's my current perception. So I'm just waiting for something, whether it be a very short-term rally, something to let me get into this market. Tony, good to see you. Simon, James, you missed a spot and full ported the shave. Yeah, that's I suppose that's a very nerdy way to put it, Simon. Wait, hold on. Sorry, you're not. Yeah, your name's not Simon. My apologies. Simo, however you say it. James, if I get a 10K account prop firm account, I actually have 1K to trade because of 10% drawdown. Why I can't trade 1K with 10% risk? Because you're thinking of it wrong. So with the argument is there, and I get what you're saying, but the difference is your 1K is what's at risk if you do that. Whereas a 10K account costs what, $50, $100 maybe. It's really cheap. So your max drawdown or your max loss or your liability on that is only, I don't know, let's say $50. Whereas if you're trading a 1K personal account, you're still putting $1,000 at risk. Wait, hold on. The math might be off there, but overall, what I'm trying to say is the downside on a 10K prop firm account is massively less than a personal account. Now, yes, it's kind of true you're trading a 1K account if you look at it that way, but you also need to account for the leverage that you get on that. So yes, you are only able to lose 1K, but you are essentially trading 10K in the position sizes you can take. So, you know, it depends what you want. Looking 12 again. Yeah, I know. I'm still getting ID'd for Red Bulls. I'm almost 30. It's not a bad thing. You know, I'm at the age now where getting ID'd is a compliment, but yeah, it is a little bit offensive. Position sizing works better. That is also a good point to look at. Yes, you can be more accurate with position sizing on a larger account. Yen intervention still on? No. So ID, yeah, yeah. Well, happens very rarely, but it does happen, yeah. So let's move on. There's not really much for me to discuss. I really don't have anything for you in terms of trade ideas. I'm very flat. I'm actually focused more on futures at the moment, as opposed to swing trades, because there just isn't anything I'm interested in. I'm still actually very bullish on the US dollar. So the Edge Finder is disagreeing with that idea, with Australian US dollar getting very bullish, Euro US dollar bullish, but I just don't really see a case. Obviously, we've had CPI come out hotter, PPI come out hotter. We've got the Fed that is, we're seeing pricing in for a potential hike by the Fed. So that aspect, and then we've also got yields that are still quite elevated. The US dollar that's doing quite well in terms of percentage moves. So yeah, I actually do quite like the idea of being a short seller on euro dollar. On the Australian US dollar, I've got no interest at all. So when we look at this, although it's getting a bullish reading on the Edge Finder, if we step away from the Edge Finder, as I said, on a central bank aspect, yes, the Australia or the RBA is still hawkish, or at least still more hawkish than other central banks. But we've also got the Fed that is now getting that perceived hawkishness as well. So in my opinion, the Australian dollar, US dollar is two strong currencies against each other. Obviously, when we boil it down to what trading is, that's not what we want to do. We want to isolate the strong versus weak. Australian US dollar doesn't meet that criteria. He missed the rest of my comment. What did you say, Bashi? How much does it cost to fund a personal 1K account? 1K, yeah, exactly. Yen did another big move today. It did. I wouldn't say it was an intervention. I just don't. Yeah, I think it was probably just a move. Okay, so let's see gold. Gold is just sideways. There's nothing going on here. So as some of you may know, I was in long gold here. I had a really good entry, missed pretty much all of this. When I say missed it, I mean, I like round tripped it. So I sat through this, then had this, then scaled in here, then we had this, and then I actually ended up cutting my profits here for about 1.5%. Could have made about 2.5% if I just swallowed my ego and just took the profit. But of course, trading's not that simple. So I did make a profit on gold, but I'm just not very interested at the moment. I just don't. I think gold's gone through a very quick change in environment. I think we obviously had a very poor environment for gold over the past couple of weeks. Then very quickly we had a good environment, and then it changed back to not being very, very optimistic again. So during the good period, I managed to capitalize on that very, very short term, but yeah, I just don't really see the benefit right now for holding gold. Dollar yen, I still would say, actually, this does look like a bit of an intervention, doesn't it? Unless there was some news, I'm not sure. Was the news today? I've got no idea. But yeah, something might have happened here, but I've got no idea. I would still quite like to be a buyer of the dollar yen. I think very easily we could correct this left side. I mean, how often do you see moves like this go uncorrected, especially in dollar yen? Very rarely. So I would expect this to get corrected. It might not be like a straight up move. It might just be more of a slow crawl to the upside. But I would suggest this is a good idea. Sorry, I probably shouldn't say that. I wouldn't suggest anything. I would say this is the most likely outcome. Right. What else is there? Copper. I don't really have anything for copper. Pound Swiss, we covered. Pound yen. Although I don't like pound or the UK, I wouldn't really want to go short pound yen. The Nikkei, interesting. I've just seen the Nikkei is getting a bullish reading of 8. So let's have a look there. I would still like to be involved in the Japanese stock market, but it's a case really of how to get in because I'm just not seeing much. Yeah, I don't know about this because even if we got the pullback into this fib zone, I would still feel very uncomfortable with this left side here. There's also a bit of resistance slightly lower than the 61.8. So I think I would sit out of this until we get a deeper correction towards the 200 moving average. And actually, I wouldn't use a fib in this. I think I'd avoid using a fib and do more of a standard pullback trade. Mini interventions, very possible. Yeah, no news. Yeah, I think you might be right there then. I think it might be an intervention situation, but all good. I don't think it's a massive deal. Yeah, I don't really have anything going on. As I've mentioned, Bitcoin still seems to be doing quite well. We did bounce off this daily 200 moving average, but the H4 remains bullish. So what we discussed very quickly yesterday was the base case or the two situations for Bitcoin that I've got right now is either we completely reject the daily, and this was more of just a healthy pullback to continue lower towards 60 to 50K. I would say that's more unlikely, but it's still possible, of course. However, when we look at the H4, it wouldn't surprise me if we actually just continue this H4 bullish trend. We break out of the bearish trend on the daily, and this then begins a new bullish regime on the higher timeframes for Bitcoin. James, AUD's strength just getting started. I would say it's already started, and it started at the start of the year, really. James, what do you know about what went down with Swiss in 2015? And could something like that happen again? No. It was basically depegged. I'm fairly sure that was the situation. I can't remember actually off the top of my head. But no, I don't think that's going to happen again. Yeah, so if we take a look at Swiss, let's go Euro Swiss. Was it Euro? I'm not sure which market was actually affected the most by it, but yeah, let's take a look at this in here. So yeah, January 2015 on the 12th, bad day for anyone that was long on the, or actually anyone that was short Swiss, bad day for them. Actually, sorry, I'm looking at the weekly time frame. It's probably even worse. Actually, let's see what the price movement was here. So yeah, 30% move within 1 week. Let's go to the daily. In fact, yeah, it was within 1 day this happened. Although it would have been quite a nice buy low situation. But yeah, I mean, brutal for anyone that was a buyer of that market at that time. Anyway, let's see what else we've got. So Nikkei seems good. Aussie New Zealand, I was also looking at this one, which I forgot to mention. So we are seeing a pullback on the Aussie weakness today. So I think we could potentially actually get into a new trade. I like the idea of actually just drawing the fib from the recent low to high. And this gives us a really nice level within the fib zone around there. So something like this, I think, could be quite a good idea. Now, of course, as I've been saying, I'm still very, very cautious because it's still a really extended market. So if we just zoom out in this weekly time frame, look at that rally. It's just incredible. It's a really beautiful sight. But at some point, what goes up must come down. So I'm not sure that's going to happen yet, but the fact we've been consolidating, we're already very elevated. I wouldn't mind taking a position here. However, if this position gets stopped out here and something like this happens, more than likely, I'm actually going to start looking for short positions and see if I can front run some sort of mean reversion. How do you come across the name Sluggy? It is a bit of a strange name. Oh, I do remember. Yeah, Bashi CHF. That feels like a lifetime ago. So euro dollar, as I said, I would quite like to be short, but the problem is I don't like to counter trade the edge finder. So when the edge finder says, you know, a bullish reading or a bearish reading, and I go the opposite way, 9 times out of 10, I'm going to lose the trade. It's just something I've noticed over many years of using the edge finder. So I wouldn't really want to be short just yet. I think what I would really like to see is the daily time frame reject this 50 moving average here, have a little bit of a correction back to the upside, maybe create some sort of triple top, or maybe even come and revisit 1.2. Excuse me. And then wait for the edge finder to flip. So ideally, at one of these levels, edge finder flips bearish, we can then get short on not dollar yen, on euro dollar. But we'll see. We'll see if that happens. CS Source. I never played CS Source. I used to play CSGO back when I was a gamer, when I was like 15, 16. But then I gambled all my skins away and I stopped playing because I got mad. Right. So pound yen, as I said, we are getting yen readings, or yen pairs getting bearish readings, but I just really don't like the idea of being a seller. It would have been quite fruitful today. If you were short on an intraday aspect, you would have done probably quite well, assuming you didn't buy the bottom. Oh, sorry, assuming you didn't sell the bottom. But yeah, generally speaking, it's still a very good carry trade to be involved with. So I just don't, yeah, I'm not really a fan of it. Moving on, it seems crude's not really doing anything. We are seeing more of a sentiment around the ceasefire in terms of it being very fragile. So I'm not really in any position to be taking any position, not in any position to take any trades on oil right now. I think it's a bit too uncertain on really where this is going to end up. So I'm going to sit out of oil for now. I just don't, again, not really seeing anything. We are seeing the S&P continue to rally. I mean, it's very good for my investment portfolio, very bad for my active trading because I'm just missing everything. I cannot get a trade in this market, and it's really frustrating. Same thing with Nasdaq, just a fantastic rally to the upside. I think if you wanted to get involved in these markets, really the best options are the Russell and the Dow, because these aren't rallying as strongly, but they are still catching the flow. So we are still seeing upside, but it's not as aggressive. So the price action we're getting here is a bit more accommodative for our type of entry styles, which, you know, swing trading, intraday type of stuff. But again, it's really a case of, would you want to be in the Dow? Maybe, maybe not. I'm not a massive fan of the Dow, to be honest. I think it's a little bit lackluster, especially, you know, when you could be trading the S&P or whatever else. Yeah, I think we all get a bit nostalgic. I still get a bit nostalgic over the Modern Warfare 2 days. Getting sniped by Trump. Yeah, there's sometimes I'll be on Instagram Reels or TikTok, and there'll be a throwback to one of the Modern Warfare 2 montages by FaZe or Saw. Shout out if anyone remembers those things. I was really into like the trick shotting scene back in those days. But time goes. There we go. We all grow up and have to pay bills. So Swiss franc is getting a bullish reading. However, actually, no, that's really good for pound Swiss shorts. Oh, I don't know. I'm tempted. Should we? I might have to get into pound Swiss because we have had this bullish trend on the H4. It seems like we're getting a little bit of a convergence or an intersection right now where we're about to flip bearish on the H4. The daily is obviously a fantastic trend to the downside as well. So I think pound Swiss might be coming to a point. So I need to see. Let's just try and nail down a bit more of a accurate entry. So I think if we could come back, revisit these highs. I mean, this is more of a micro analysis rather than it being, typical swing trading style. But I think that would be the option. Let's just see if we've got some sort of fib. So fib from the low to the high of this bearish leg does line up with these highs. So I think this might be the option. So some sort of maybe a pending order at this 50% retracement. Stop loss reasonably or realistically could just be right at the high here. And the reason I would use I'm saying a tight stop. It's still quite large, but I think it's the tightest I could get it while still feeling safe, is because when we have these rejections off the 200, we don't come and revisit. Like, it's not a case where we continuously chop around then drop. It's a case of we hit and drop straight away, which we've already done. We've hit, and now very likely, if we just look at the repeating pattern here, we could just continue to dump lower. So I think realistically, this is probably the best option, at least for the way I trade anyway. 360 no scopes. Played the new Modern Warfare? Nah, I'm not. I don't really play games. In fact, the only game I played recently is chess and Zelda on my Switch. Black Ops, yeah, I used to play that as well. New Zealand US dollar shorts, yeah, I think that's also quite a valid trade. Let's see, where is it? Here. So I think stepping away from the hard fundamentals, like what the Edge Finder uses on a central bank side, I think it's a good idea. But again, the problem is the H4 looks quite bullish. So what we've got, bullish moving averages, we found support through here. So it looks very much like break, retest, continuation pattern. So in my opinion, this is actually more of a bullish setup than bearish right now. So I can't get into a short position. We also don't have a bearish New Zealand US dollar short reading, a bearish New Zealand US dollar reading on the Edge Finder either. So fundamentally, it's not there. Technically, it's not there. You could argue, again, sort of the central bank aspect maybe, but yeah, I mean, it's just a little bit too flimsy at the moment. What's my chess elo? I think I'm about 800 on chess.com at the minute. I'm not great at chess. I'm by no means good, but I enjoy it. James, see much downside for silver? Let's see. I've not actually checked the XAG USD chart in a while because I've been using SSLN. So let's see about the CFD market. Downside. I'll be honest, I'm very much in the same mindset with silver that I am in gold. I don't think silver is in a fantastic, excuse me, I don't think silver's in a fantastic environment to have these crazy rallies and just start, have the same uptrend we had over here. However, I do think silver is still a fantastic buy if you have the bankroll to accumulate and hold it over some time. I am very, very certain silver can go back to 100, start revisiting 120, maybe 150 over the longer term. So it depends really if you take it as just a standard swing trade technical approach here. I wouldn't mind buying it somewhere. Maybe it's 50%. We come and revisit this high. So obviously we've got the resistance, we've had the break, some sort of retest into the 50% retracement, then a continuation higher. That's the basic rundown on a technical analysis 101. But then if we go to the Edge Finder and have a look at the silver, the drivers of silver at the moment. Let's see, where is it? Here. There is literally nothing. So we've got a score of 0. So we've got technicals bullish. Net positioning on an institutional aspect is bullish. However, the latest report is bearish. Economic growth is bullish, inflation's bearish, and jobs market is neutral. So there isn't really much to drive it unless you are just following the trend. I don't really see much reason to be involved. As I said, I'm in SSLN, but mine's a investment, not just a swing trade. So it's a bit of a different thing. Hey James, hope you're doing well. Thank you. I'm doing fantastic. Hope you're well. Hi, James. It hurts. What hurts more, losing to Indian bot or on chess, or losing a trade? Losing chess. Thing is, with a trade, I'm very disconnected from trading at the moment. It's like I've been doing it for many years. Put money in, get money out. It's receive. I don't know how to explain it, but you get to a point where losing a trade, it doesn't matter, but losing a chess, it's like a real skill issue. So with trading, you can do everything right and still lose. But with chess, it's not like that. You have to do things right. If you don't do things right, you lose. It's your fault because you didn't play good enough. And that's as simple as it is. So losing at chess really annoys me. Really, really tilts me. I definitely don't have the cool, calm, collected head that I do in trading with chess. Did you eventually move? No. No, I'm still in this horrible country, unfortunately. Anyway, we've got about 3 minutes until Tiger comes on to take over the show. So if you've got any questions or any chart requests, feel free to send them over. I'll take a look. If not, we can keep rambling for a little bit. Let's just see. Let's have a little quick think if there's anything I've missed. I don't think there is. Aussie Swiss getting a bullish reading, but with the Swiss franc bullish reading, I'm not sure I'd be overly interested in getting to a new position. However, because I'm already long, it's a little bit different. So what we could look to do is, I've already got my stops trail. For some reason, I think maybe because these are spike. I don't know why. Maybe this just because they're the market open spikes or whatever. But I've not been stopped out of this. I've had my stop at break even basically since this period, but obviously these spikes haven't stopped me out, luckily. So what we could do is take the fib from the, that's not the fib. Take the fib here on Aussie Swiss from low to high. We're currently in the 50% retracement. We've also got a really nice level here for support. So there is an idea, if you're bullish, to be a buyer here. Let this market run. As we've already discussed, it's a really nice carry trade because you're just paid to hold. So there is this option. However, do I want to do it? Maybe. The problem I've got, though, is I'm already long now on Aussie yen as well. How much exposure do I want to the Australian dollar? Not that much. Is Thailand still on? No, I've written Thailand off. I'm looking at Paraguay at the moment because they've got quite beneficial tax bans. I think it's actually a flat 10% tax, which is fantastic. Best chart setup at the moment, to be honest, it's probably Australian dollar Swiss here, or it would be the Australian dollar New Zealand. These are the only two right now that have kind of piqued my interest. So something like this. Other than that, I don't have really anything. There's a few things lining up. Actually, sorry, I forgot to mention Pound Swiss is also one that I really, really like. Oh, well, that's not Pound Swiss. Pound Swiss is here. So Pound Swiss on the daily. I think this is also a fantastic opportunity. Joined late. Any ideas for near term? Yeah, Pound Swiss, Australian dollar Swiss, Australian dollar New Zealand all have potential right now. But again, that's not financial advice. You need to do your own research. Move to South Africa? No, thank you. What about UAE? Absolutely not. No. I have a real gripe with Dubai. I don't like the morals. I don't like the way they built Dubai. I also don't really like anyone that lives in Dubai. from what I've seen, that's not a, I know it sounds like a blanket statement. I mean, like the gurus and the influence and stuff. I hate that. I hate it. So no, Dubai's not for me. I want to go somewhere where it's just me on my own or with my partner, and just, relax and be peaceful. That's all I want in life, is peace and quiet. Anyway, ladies and gentlemen, you have Tiger coming to take over the show. Don't go anywhere. He's a fantastic host. Guys, stay safe. I'll see you all tomorrow. Thank you for joining. Don't get margin called. And yeah, see you soon.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like $5 all the way to $200. 100K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Thursday. Hope you're all doing wonderful today. Got today, we got tomorrow, and then we can bask in the weekend glory, guys. Just like Nick is all week, off enjoying himself. The man works harder than about anybody I've ever seen on content creation, guys. He's on vacation. He's still making content. Got to admire that about the guy. So awesome stuff to see. Great content as always. Yeah, marketing. He's good at marketing. You guys like the little tongue-in-cheek puns that he throws in there with some of the video clips inside of his videos? Yeah, I get a kick out of those every time. That's good stuff to see. So anyway, we'll welcome him back next week for sure. As far as today goes, guys, I'm still in just that meta trade. Hey, look, I know I've been a broken record on that front, but basically still there. Let's see here. I think I have it up over here. Yeah, I got to get this out of the way. So I finally got a little bit of a push up out of that zone. This is the one I got another day. I think I need to refresh my screen over here. Refresh. Just going to sit on my hands. I know I flirted yesterday with taking it out if I got too bored. Guys, I'm not going to do that. Look, I got a line in the sand. So I'm just going to let it be and see if we can't squeeze up there. Oops, there goes my screen. Yeah, anyway, so yeah, that's the only one I'm in. Yeah, I agree with what James was saying there at the end. Definitely interested in some of these Aussie pairs that we see over here on the Edge Finder. Aussie dollar chiefly. Got the Nikkei on the list now. Look at that. That changed. For a brief fleeting moment, we had the FTSE 100 on the list. I saw that this morning. It looks like it's now fallen off. Kind of interesting. But we take a look at the dollar data. We obviously had that bearish jobless number come in today, and I think the other items were neutral. Go double check that. So there you go. Retail sales was neutral. But our unemployment claims changed. So remember yesterday we were sitting at 55% down here. Okay, so the dollar, just like that, span of one day went from 55 down to 40. So, and I know I've mentioned this on screen. We all have our different ways that we like to approach all this data. Me personally, if it's between that 40 and 60% range, I don't pay as much attention to it because it's a little neutral for me. But once we start getting down to this 40 and below, that's where I like to actively start seeing if I can't short this thing. Now, it's a little touchy right now because obviously President Trump and President Xi are cussing and discussing Taiwan, amongst other things right now. They've had some agreements. So all that with this summit, today is going to be, well, I should say their day one is over with. But basically we have 2 more days of that, okay? They're probably going to sleep at this point. Well, actually, never mind, because President Trump doesn't sleep. He's a vampire, guys. You guys have seen his crazy times of day, times of night he sends posts. So he's probably not sleeping. I'm sure Z probably is. But anyway, 2 more days of that summit is the point. So they still have some tough things to iron out. I mean, as far as the agreements, though, obviously they both agreed on the Strait of Hormuz needing to stay open. Looks like Trump did sell him on some more oil and agricultural goods, soybeans specifically, because I know the farmers here are having a little bit of issue with that. I guess I've been reading where there've been some banking or some farming bankruptcies have been kind of elevated, which is a sad thing to hear. But I figured that was probably going to be one of the first deals that Trump wanted to get was deal with more soybeans and agricultural. So it looks like they've accomplished that. So that should make the farmers here happy. And yeah, President Xi agreed. Iran must never have a nuclear weapon, guys. So it's good to see that he's on the same side of that. Forget politics for a minute. We don't need any more nukes in this world, guys. We really don't. Okay, especially amongst volatile countries. Now, you could make an argument we're all volatile countries in our own ways, but hey, at the end of the day, it's good to see that the other superpower of the world, or one of the main ones, has agreed on that front as well. But yeah, they still have Taiwan tensions they're dealing with. Obviously, he's got his who's who of U.S. CEOs there, cussing and discussing, making deals, trying to make deals, sitting in on parts of that summit outside of the times where, Trump and Xi are behind closed doors by themselves. Yeah, and then I think that was the main things. President Trump did invite him in September to the Oval Office, so it looks like we may possibly have Xi coming to the States and holler at us. And I think that's kind of a recap, guys. And again, we got 2 more days of that. Who knows what the heck they're going to talk about? So, the bottom line is we got a little bit weaker of a dollar now. So, do we want to actively start shorting the dollar? Well, just depends. Okay. It's a very good sign for the Aussie dollar long position that we're seeing over here. And then we got dollar Swiss, which I do believe was higher up on this list this morning. It's all the way at the bottom now. How about that? Dollar Swiss, dollar yen is back on the list as well. So actively got a couple of dollar short ideas, or 3 when you include Aussie dollar longs and Euro dollar longs. So that makes it 4. So I figure we'll take a look at those 4. As always, guys, if you have any specific tickers you'd like me to push to the front of the front, listen to me, the front, then I'll definitely check those out as well. I love the funny stuff he does, Basha. Yeah. I always say, guys, whether you love or hate politics, you can't beat it as a reality TV show. There's comedy, there's humor, there's annoying, like all the things you think of when you go watch, any other reality TV show. That's basically what politics is. Now, we have to know this stuff, so at least they're making it comical for us, right? Because it obviously affects the markets, everything we trade. So anyway, let's go have a look at some of these charts. Dollar Swiss, dollar yen shorts. I wanted to look at those first. Where we got dollar Swiss, get my daily on the right, trending downwards. Now, the alligator's mouth is starting to close a little bit. I don't like that. But at least if it's closing, it's closing in and around a supply zone over here on the left. So let's see what we got. That's a 4-hour chart. 1 hour. I don't like the look on a 1 hour because my 50 EMA is now crossed above my 200 EMA. I don't like that. I prefer my 50 EMA on my execution time frame, guys. I prefer that thing to be down. I prefer that alligator's mouth opening to the downside, and we're not getting that. So at this point, we've retraced a little deeper, to the point to where it's almost a shorter term uptrend at this point. We've broken structures here. We've broken structures here. We've broken structures here. And now we're smashing into that overhead supply. So, it's kind of a spot. It's kind of gray area right now. Bouncing into supply, yes, but it got kind of lazy down here and started trending back to the upside when we drop it to smaller time frames. Now, obviously, the highest time frame, which is the most accurate, okay, we're still getting the series of lower lows, lower highs. So this ultimately trumps, no pun intended, everything that's going to be on the left side execution-wise. But if I'm wanting to short this thing, I feel like I need a little bit better of a discount. So let's go put a 1 hour chart up here on just a one chart look. Yeah, guys, you see where I have my alerts. So my alerts at the 79 whole level, or whole number, psychological number, 0.79 even. Because we have got a daily zone, which I didn't draw up, but you got a daily supply. Okay. Daily supply here. I know that because I have my gap on a daily. That's a pretty nice looking gap right there on a daily chart. Would you agree? The gap is bigger than the range of the zone itself. I like to see that. I really like to see that. Guys, you see me all the time drawing up gaps, relative to the range of the zone. You oftentimes see me drawing up smaller gaps like this. But when the gap is at least the size of that zone, if not bigger, that's even stronger. That's an even stronger signal that supply heavily exceeded demand. Now, obviously, we got our push down. It would have been nice. It would have been a lot nicer if this candle would have kept on through and closed below this candle, or the rest of this demand that we had experienced from back here on March 11th. We didn't get that. It just wicked and then immediately slammed back to the top. It finally rolled over and closed. I just like it, guys. It's just so much higher a probability when that leg out, just break structures immediately or underneath zones of demand or, support resistance. However you guys look at the extremes. Okay, there's a few ways to look at it. So support resistance, supply and demand like I do, swing highs, swing lows. I like it to break through all that. And we did. So that's the only real downfall I would say to this zone up here. And then, but it's a pretty good discount, even though it didn't do that. At the end of the day, it's quite a ways back to that price point. Still got another 60, 70 pips or something like that. I say all that to say, I don't know that I'm really that excited about this 4-hour zone because it's pretty much in the center. If we just take a 30,000 foot step back into this big chop zone, big retail chop zone. Remember, I want my supply and demand zones away from equilibrium. Okay, you had some equilibrium over here, and then you had a little bit here. You could probably make the argument, draw it down a little deeper, whatever the case is. Point is, I don't really like trading in this area. I only care about the extremes, and really the best extreme is at the top, like you see. Okay. I'll just get rid of that. Daily, 4-hour, and then right here you got a little bit too much of a cluster as well. I just don't like all this action right here. I want a deeper retracement for the highest probability. Now, I'm not saying that it'll get up there. I'm just saying that would, to me, look a little more attractive than all this down here. Now, dollar Swiss is giving us, so this is another thing to take into consideration. It is giving us a very bearish score. We're getting a -10. We're to double digits on this thing. So when we get these very bearish scores, or very bullish if it were the opposite side, that does tend to make me a little more lenient about some of these retail areas or chop zones, guys. The diddle in the middle, okay? I still don't like to do it. I still prefer the extremes. But as you can see, we're in the zone now. So do we hit the sell button yet? Well, I wouldn't advise it. Okay? As always, guys, not financial advice. Do what you want. But if you're asking me my thoughts on this, I really need to see a structure break to the bottom first. Because so far, here's what we got. High, low, higher high, higher low, higher high, higher low. See what I'm saying? We're still on that. We're still on this structure right here. We haven't broken any lows to the downside, and all of our highs have been higher as well. And this is on a 4-hour chart. So it's different if this is happening on a 1-hour chart or a 30-minute or a 15-minute chart. Well, you have to have a temporary counter trend look when you're getting in the trade, but I don't want it to be on a 4-hour. That's just a little too high of a time frame for me to want to get out in the middle of. So, just taking a look at that, really the next step is, hey, we got to break at least a minor structure, but preferably one that's a little further away. Something like this for that rollover. Because at the end of the day, I would still want this break of structure. That's a little too high up. Okay, I want to see that break of structure to the downside. And what does this look like? This now looks like what? Break of structure. It looks like a confirmation entry, doesn't it? Because this turns into a impulse leg. Why does it turn into an impulse leg? Well, because we broke a structure to the downside. And then again, I personally will look for the retracement back up. I don't want to sell this breakout down because quite often they retrace. And when they retrace, I'm looking for a newly created supply zone somewhere in that general area. So by waiting for 50% of my worries, which again is the fact that we've broken a structure, creating a little bit lower of a low, we still haven't created a lower high yet, but this is where the risk comes in. Because now that it's proven that it's broken lower, now I just need to see a lower high. Well, I project that the lower high would be formed in or around a brand new created supply zone. So this is where I would look to take my trade. At the end of the day, waiting on this confirmation entry will be, you're going to get a little less favorable of a price because obviously the best place to short this thing would be the proximal line of the supply zone itself. By the time I wait for confirmation, I may lose a few pips, a few pips that I could have added to my reward risk ratio, but I'm fine. I'm totally fine sacrificing, 3, 5, 10, 15 pips at times just to get this 50% of my worries taken off the picture, taken out of the picture. I'm totally fine with that. I'll do that every time. That's why I love confirmation entries. Because again, it's not proof that it's turning around, but it is proof that it's at least trying. And all I can ask is for it to try a little bit. And then I still ain't going to trust it because I'm going to wait for the discount to the unfilled orders from the newly created supply zone, which oftentimes happen on a smaller time frame. So this is a 4-hour look. Probably step it down to a 1-hour chart. Look for a supply zone somewhere in this impulse leg, or a 15, or whatever the case is. Just depends on what picture looks the prettiest. So hopefully that makes a little sense, guys. I know hopefully I don't bore you guys when I go through these examples, but all the guys on the team do such an awesome job about going through all the specific assets and things. I just like to find my niche, just kind of going through a little mindset. And hopefully you guys appreciate that. If you do, great. If you don't, let me know. I can always change it up, go into a lot more signals like the rest of them do, or a lot more assets. But I don't know. I feel like it's important to at least understand what the banks are thinking so that we can quit fighting them and try joining forces with them, since they're the ones that make all the money anyway. So hopefully that makes sense. Yeah, that's basically what I'm looking at on dollar CAD. Again, I don't want to fight the higher highs and higher lows as we speak. I want to wait for a higher retracement to something that's probably a little more higher probability. So that's dollar Swiss for you. Let me double check the chat. Could you check Aussie Kiwi for longs on the 4-hour zone of demand? Absolutely. Aussie Kiwi, so bullish +8, real close to very bullish. Let's go take a look at the zone, the 4-hour zone he's talking about. Yes. Yes. You referring to this zone down here? Now, this is a 4-hour look. Now look, there's two ideas here. So this is a zone. There's a higher probability zone, a little deeper. Okay. +8. So that means we're pretty close to very bullish. Okay. It's pretty strong. We already had a screaming push that closed through this old mitigated daily zone, which was basically already taken out, guys. Okay. To the point on the distal line of that supply zone, that daily supply zone that we had from, I think, way back when. I don't even want to go back that far, but so the liquidity has basically been taken out if we're just looking at the zone. So this is really no go. This doesn't even, that's old news. I might as well just go ahead and delete it. The only reason I left it up is because, we didn't really get a close through the top of that. And we still haven't, in all fairness, on a 4-hour. Now, I think we did on a 1-hour. Okay. And you can see right there. Okay. The last green candle up over here near price. So we actually got a close now, whereas we didn't back here. So now that we got that close, that tells me there must be some underlying strength somewhere. Now, I drew up the zone where I currently have my alert at 121.5, okay, 121.50, which is my 1-hour zone inside of my 4-hour. So this is my 4-hour, 1-hour confluence. The only hiccup I have, the only hesitation is the fact that we got a lot of candles to the left. If I'm a bank trying to accumulate a position, or a hedge fund, okay, pension fund or whatever, or a whale, perhaps that's plenty of time to be slowly accumulating my position. Perhaps. Okay. But you can't deny the screaming Mimi shot we had out of that, which actually closed on this 1-hour time frame above the rest of this, above this swing high. So I do want to keep an eye on it. I still think the higher probability one is deeper, but I'm happy with taking a stab at this one potentially, because look at all the green candles, even on a 1-hour chart. I mean, you had a dozen of them or so, half a dozen. So that's a continuation. That's a strong momentum move. That's a strong impulse leg, guys. So I always want to take a look at the origin of those impulse moves, see if I can hitch my wagon to it. So we already know we got a 4-hour. And down a little deeper, this is really where the consolidation starts on a 1-hour. So absolutely, I'm going to keep an eye on that 121.5 level. I mean, you could make a case for the 4-hour, because I know that's what you mentioned specifically was 4-hour. But here's what I'll say: when we get down to when we go from 4-hour down to 1-hour, remember the rule of fours. Take whatever time frames you're on. If you want to refine it, just divide that by 4. When we go down to our 1-hour chart and look a little deeper inside of this 4-hour, okay, the 4-hour starts up here, right? take a look at the volume spread analysis at the bottom. The tiniest of tiny blue candles, and then the one right after it's ugly as well. So what I'm saying is, even though I drew it at the 4-hour level, when we drop down to a 1 hour, there's no volume there. So the volume really kind of started on this candle as far as the last downwards gasp that they had before the obvious push up. So I wouldn't worry so much about the 4-hour as I would really when you start getting into this candle right here, because that's where we started having a little more of a volume push, if that makes sense. And I'm just asking for a little better reward to risk than even that. So that's why I'm personally waiting on the 1 hour. 4-hour, 1 hour, my phone's going crazy. Let me turn it off. Get out of my way. So hopefully that helps you out. As always, guys, I'm not a signal service, but I definitely am interested in that. I can tell you I'll be paying attention to it. And just like I drew up here, guys, what I want to see is price obviously continue down and start basing around sideways for a few candles and start adding, start creating a little bit of that short-term equilibrium or fair market value, to where we start adding, creating liquidity on both sides of this. This is what I like to see. This is the megaphone pattern we talk about. And actually, I need to, that one goes down here, sorry, because these are sell orders. Sell orders, sell orders. And up here we got buy orders. Oh my gosh. Need to get I got such a sensitive mouse at times it likes to stick on me. Okay, buy orders up here from the shorts. So in each of these situations, we're getting liquidity manipulation, guys. Because these bulls are going to step in, push price up. You're going to get liquidity down here. The bears are going to step in and push price down. They're going to leave their stop losses up here. Then this process repeats. The bulls take advantage. They push price up, break structure, higher high, leave their stop losses down here. The point is, I like seeing these manipulation, these little liquidity grabs get created. And I love seeing this happen just ahead of a demand zone. Because I'm looking, if we're talking Wyckoff theory here, Wyckoff strategy, okay, you start getting your, I don't have everything memorized, guys. You could go down a rabbit hole of Wyckoff theory and last point of support, selling climax, this and that and the other. The only thing I care about out of all that is the spring. The last gasp down after you start messing around here, making higher highs in the middle of a downtrend, all that stuff. All I care about is the spring. Give me that spring, or obviously on the opposite side, if you're trying to short where they're distributing their inventory, then you'd be looking for the up thrust, the final up thrust. Okay, it's basically a spring, just inverse. So I care about that. And I like seeing that when that happens at a zone. So megaphone pattern, this is where you pull out your discord joint, but the point is you're making higher highs while simultaneously making lower lows. That's just a little trick, guys. It doesn't always happen. Doesn't always happen, but when it does, it's a beautiful sight. Okay. Let all the retail crowd chew each other up to pieces. I'm waiting for the sharper decline. I'm waiting for the more extreme move to the institutional demand zones and staying out of this retail nonsense. So hopefully that makes sense. Helping you out there on Aussie Kiwi. Yeah, absolutely, man. Aussie Yen, I did want to check that out as well, since that's our most bullish currency pair. I kind of drew up some fibs here, guys. Still keeping an eye on that 61.8 because that just so happens to be where my 4-hour zone is over here. Talking about this candle here. I mean, nothing's perfect in trading, but that's about as pretty as it gets when you have a 61.8 level right at a zone. Now, I don't use fibs a lot. In fact, I think the only real reason I pulled it out in this situation is because I still feel like this is a little higher on the curve. If we're looking at this as a major swing low down here, just talking about this last couple weeks of price action, swing low, swing high. This is pretty well in the middle. But what I liked about it was you got a little bit of former resistance points kind of coming into fruition from back here. Okay. Just a few different points, not anything too major. Okay, resistance potentially becoming support. And it pretty much already has, because we got a little bit of a pushback into it here. Talking about this swing high, this swing high. I don't necessarily want to make it huge like that. But even if you do that, then you can see where it's kind of playing. So it's subjective, guys. You got to be careful with this support resistance stuff as far as how big or small you make it. At the end of the day, I don't know if it's a hot take or not. I don't think this ought to be a reason to buy or sell something. I think you ought to have something else inside of it. So for me, that's obviously where I just look for the zones, the demand zones, supply zones. So I really do like that area, although it is a little higher on the curve. Former resistance becoming support. Very strong signal on the edge finder. And the leg out candle was great. I had a really nice gap. Really nice fair value gap from here to here, showing the inefficiency, showing that demand heavily exceeded supply. Pushed up, broke structure. In fact, broke a double top. And then look, the manipulation commences, guys. Okay, and I already drew it up on a 1 hour chart. Just taking a look at this liquidity pocket that was created down here, because these buyers right here pushed price up. So they got to put their stops somewhere. I think there's probably going to be stops here. There's probably going to be some stops down here as well. Okay. So sweep this, hop into the unfilled orders of the zone of demand, and it's off to the races. Now on a 1 hour chart, this is just like what we just looked at for Aussie Kiwi. It's a 4 hour or 1 hour confluence. And when we look at the 1 hour candle, look how strong the gap is, guys. Again, we joke with the fair value gaps. I don't trade them, but I love to see them still, because this is where a lot of retail traders are playing. Think about it. You guys have all seen on YouTube or wherever else all the fair value gap strategies. Okay. Well, when these traders come down, when price comes down, these traders buy into their fair value gaps. Where's their stop losses? Okay. It's down here too. Probably, the point is a lot of them get stopped out when price goes through their fair value gap. They put too tight of a stop on, and then price finally grabs somewhere and goes where they intended on it going to begin with, right? Well, by me waiting on the zone of demand, which is this green candle, I'm the one with the deeper stop loss. Stop loss is a lot deeper. It's to take into account that this might happen. Okay, so it's just a little mind shift. If you remember one thing from what I'd say today, remember this. Wherever put your stops, wherever you think your stop loss is best, drop it a little lower, especially if you're getting stops snapped a lot, only to see price go in your direction. It's okay to decrease your reward to risk ratio if you have to. Okay. Again, I brought this up in the past. I started off 3 to 1s minimum. If it was 2.5 to 1, I wouldn't do it. And then I finally became victim to this, to where I was just choking myself out, getting stopped, and then seeing price go in the direction that I thought it was going to go to begin with, or I planned for. The difference was the zone, the stop loss, guys. The stop loss will help a lot of things. If you're losing a lot on 3 to 1, drop it to 2 to 1. Give you a wider stop loss. Okay. If you're a 2 to 1 trader and you're losing a lot, drop it down to a 1.5 to 1 or a 1 to 1. Just get comfortable with winning again. And when you get comfortable winning again, the confidence goes up. When the confidence goes up, you start seeing the big picture a little bit. It's easy to fall off. It's easy to lose the pulse of the market. If we miss a day or two there, we're sick or whatever, the weekends, even over the weekends at times. So, yeah, just kind of monitor that, see if that helps you out. Do you think Edge Finder is wrong on US dollar? I feel like market's still pricing in hike rates and more US dollar strength. Well, the Edge Finder is going strictly off of the economic calendar. So just to finish, and I'll wrap up with this because I know I'm already out of time. The point of the Edge Finder is to take a look at the data, the US data over here, and give you just a fundamental picture. This is real data. This isn't something Nick created or any of us. Okay, these are the facts straight from the economic calendar. So that's set in stone. This has nothing to do with the Edge Finder. The Edge Finder just goes through and finds all the data, puts it in one convenient spot so you guys can see it at a quick glance like this. Okay, and then the other piece to that is obviously the fundamental data, or the sentiment. Okay, having a look at the COT, which, by the way, tomorrow we'll get an updated copy, which will be accurate as of Tuesday. Somebody asked me this yesterday, and I didn't see it till I ended the show, but they were basically asking about the validity of the COT report. Well, think about it. The banks aren't scalping on a 5-minute chart, guys. So yes, it is 3 days old when we get the report tomorrow. But a lot of what they do is position trading, longer term stuff. That's why we have this level up here showing you the position traders, the longer term traders. They have prop firm traders. Okay? They've got algorithms on some smaller time frames. The point is, they're in it to win it. They're in it for the long haul. Okay, so yeah, it's a few days late. That's okay. If you're a shorter term intraday trader, it's actually perfect. I think it's great. That's exactly what I am, and that's why I love it so much. I only care what the COT data gives me for about a 1 week span, because I'm typically in trades for 1 to 5 days, 1 to 4 days max. So I'm totally fine with it just being, as far as the week to week changes at the bottom. This is what I care about. This is what a lot of us care about as far as swing trading goes, short-term swing trading. So very, very legitimate stuff. And this is why we go into sentiment analysis. This is why Nick has added it to the Edge Finder. Because again, this is hard data. This is not anything Nick created. This isn't anything any of us created. This is hard data straight from the CFTC, okay, covering all that. And then the same thing with the retail sentiment. And I know I'm out of time. Sorry, James. Taking a look at what the average trader at home on their laptop or their smartphone's doing. These are hard data points. So the only thing the Edge Finder does is just takes all the data from all the different sources, puts it into a one-pager, spits out a suggested score, but nowhere, and I'll end it on this last sentence, nowhere on here does it say go buy, go sell. It just says it's got a bias of bullish or bearish, okay? So that's why this is not a signal service. This is only a weather forecast. I've got clouds outside. My weatherman this morning said we might have a chance of rain. Guys, it may not rain, but the same concept applies here. This is just a forecast. You may get Aussie dollar completely drop 100, 200 pips. Okay. Trump and Xi may get in a fight, and there you go. Okay. So this is strictly the data. So definitely try to separate that out. Ladies and gents, I'm sorry. I'm over time. With that, have a wonderful day. Trade safe. We'll be back tomorrow to close out the week. See you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.